Hi, hello my dear CA intermediate students, a warm welcome to the amendment session on GST for September 25 exams. And as you know that in CA exam there are 3 attempts, and for September all amendments up to 28 February 2025 will be applicable for September 25 exam. When you appeared for May 25, or if you are appearing for the September 25 only for the first time, it's okay, but if you have already appeared for May 25, so all the amendments you would have studied up to 31st October 2024. And September 25 exam is so much relevant for amendments because usually what happens is that certain amendments which are not tested will also be tested for September 25 exam, plus at the same time some new amendments of September 25 also will be tested for September 25. That's what every time September 25 attempt you can see some good number of amendments, because that May 25 amendment as well as September 25 amendments will be applicable. In this particular video we are going to focus on amendments which are applicable for September 25 exam. Suppose if you want to know the amendments which are applicable for May 25 etc. and all, so therefore don't worry, you attend for the new exam oriented batch. That new exam oriented batch is gonna happen from August 6th to August 9th. So August 6, 7, 8, 9, 4 days. So it will be available in our YouTube live as well as it will be released. So in YouTube it will be there. Plus we are conducting a face-to-face class also, that will be in Mylapore Fine Arts. So 4 days exhaustive. We are going to spend each day 8 hours on an average. So 8 4s are 32 hours. So that 32 hours you can attend including this amendment. So if you already completed the portion, just watch these amendments. If you have not completed the portion, don't watch these amendments. You watch that exam oriented classes for 32 hours. Anyhow, these amendments will be covered in that particular exam oriented batch also. So therefore, if you have already completed and if you are in the revision mode, you watch these amendment lectures. If you now only wanted to start your preparation, so please go ahead, with the exam oriented batch. You just wait for some days and you can do. No sir, I want to do both. Nothing wrong in that. You can do both. So without further delay, we are moving on to the amendments discussion, and whatever PDF which I am going to share in the screen, so it will be available for download from my website. So just visit tharunraj.com. In that, go to downloads. Under downloads you will be able to find amendments for September 25 exam. Just click on that amendments for September 25. The PDF will be opened and you make a print of that PDF and then you start watching this particular lecture. So without further delay, let's move on. So this is the PDF which I am referring to. So here we have around some 30 pages. I have given here the index of amendments. So we are having some 20 amendments, just 20 amendments. These are exclusively for September 25 exam. These 20 amendments, if you are thorough with, enough. If you have already completed up to May entire portion, just these 20 amendments only you need to see for September 25 exam. Even I have included the illustrations on amendments also. So look into the first segment. The first segment is Introduction to GST. In this, we have already some non-taxable supplies. What are the non-taxable supplies under GST? We know alcoholic liquor for human consumption and petroleum products, correct? So in that, petroleum products, total 5 petroleum products: crude oil, petrol, diesel, aviation turbine fuel and natural gas. There is no change in the petroleum products. And why is it called as non-taxable supplies? Because as per the constitution, there is no levy of GST on these supplies, and so petroleum products will come into the ambit of GST as and when decided by the GST council, but alcoholic liquor for human consumption is completely outside the ambit of GST. Now, when it comes to alcoholic liquor for human consumption, now they have added 2 more products, that is denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol. These 2 goods. Why? Because these 2 are basically raw material for manufacture of alcohol. And what happens? I am an alcohol manufacturer. Now I will buy some raw material to make the alcohol. Now my finished product is not chargeable to GST, which means on the raw material I cannot take ITC, whatever GST paid I cannot take ITC, correct? Alcoholic liquor for human consumption is non-taxable. Non-taxable means it will be coming under exempted. When it is non-taxable or exempted, I cannot take ITC on my inward supply, correct? So, but the major raw material for making alcohol is these two: denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol. On this, if ITC is not available, that is going to add to the cost. For that reason, what government did now, they have amended section 9 and through Finance Act 2024, but it is effective from 1st November 2024, because of which only it will be applicable for September 25 exam for the first time. And these two goods are also kept under non-taxable, which means on this there is no levy of GST. So therefore, alcoholic liquor for human consumption and undenatured extra neutral alcohol, okay, undenatured. So this is not denatured here, undenatured extra neutral alcohol, you can see here, undenatured extra neutral alcohol or rectified spirit which is used in the manufacture of alcohol, these also excluded from the ambit of GST. So when you remember now, alcoholic liquor for human consumption, undenatured extra neutral alcohol, rectified spirit, these three are also non-taxable. Sir, what about other raw materials or other inward supplies of the manufacture of alcohol? That is subject to GST, we don't have any relief there, but the major raw material is these two, for that only they have given the relief, okay. And so now what will happen to the position of goods under GST? So previously only on alcohol there used to be state excise duty and CST and VAT. Now on denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol, as there is no GST, the old indirect taxes, that is the state excise duty, will be applicable on manufacture and CST and VAT will be applicable on sale. If it is interstate sale, CST, intrastate sale, VAT, okay. So previously it was subject to GST and now they have brought it into exclusion from GST, which means the old indirect taxes will continue to be applicable on these also. Like alcohol, how old indirect taxes were applicable, even on extra neutral alcohol and rectified spirit used in manufacture of alcohol also there will be state excise duty. And when state excise duty will be applicable? State excise duty is applicable on manufacture. Remember, central excise duty and state excise duty is on manufacture, CST and VAT is on sale, okay. So state excise duty, state excise duty, state excise duty is when upon manufacture, on manufacture, state excise duty is on manufacture, whereas CST or VAT is upon sale, on sale of these, okay. This is what you need to remember as the amendment for the first chapter, that is segment 1, introduction to GST. Let's move on to the amendment in second segment, that is supply under GST. We all know that 7 subsection 2 deals with exclusion from supply. So 7 subsection 1 inclusion, 7 subsection 2 exclusions, and 7 subsection 1a classification of supply into goods or services. In that 7 subsection 2 exclusion from supply read with schedule 3, there are some list of activities on which there is no GST, it is excluded from supply. This is neither supply of goods nor supply of services, and you would have remembered that as spelled slow, okay, spelled slow. Now change that because they have added 2 more activities into exclusion from supply. First we will see what are those 2 more activities which are added as excluded from supply. The first one is insurance services jointly supplied. What is the meaning of that phrase? Insurance services jointly supplied means that is co-insurance services. Let's try to understand this with the help of an example. So now we are going to see one example to understand what is the meaning of that co-insurance services. Say for example, there is one person who is having a factory building, and that factory building, so they wanted to take the insurance. And what is the value for which they need to take the insurance? Say this particular factory building is worth 400 crores, okay. So this factory building is worth 400 crores and they wanted to take insurance with respect to, that is fire insurance or general insurance with respect to this factory building. But the problem is that, so one insurance company will not be able to give the entire coverage. So therefore there are total 4 insurance companies which formed a consortium. Consortium means what? Group. Okay, consortium means group. Consortium. So consortium of insurance companies. How many insurance companies? Total 4 insurance companies. So insurance company A. So insurance company A, then insurance company B, then insurance company C, and insurance company D. So total 4 insurance companies, they formed a consortium, and together they are providing the insurance services for the factory building. Together they are providing insurance services, and this is known as co-insurance. Got it? So when more than one insurance company as a group provide the insurance services to the insured, so here the factory building is the insured, okay, so then it will be coming under co-insurance. Now what happens? This particular insured will be paying insurance premium. How many payments he will make? Only one payment to the consortium, okay. So in this particular case, say the insured has made the payment of premium. So what is the premium that is being paid? Say the premium is somewhere like 1 crore has been paid as premium. 1 crore has been paid as premium. Now to whom they will make the payment? So one person they need to make the payment now. Let's take insurance company A as the lead insurer. So out of the 4 insurance companies, one person will be called as a lead insurer. So in this case, the insured will make payment to lead insurer A 1 crore, and thereafter the lead insurer A will distribute that money to these 3 insurance companies. Are you getting this? 1 crore received by lead insurer A, and thereafter they are giving to the other insurance companies. Say for example, say somewhere like 25 lakhs given to insurance company B, 30 lakhs given to insurance company C, and somewhere like 5 lakhs is given to insurance company D. So what is happening here? So 30, 40, 50, 60 lakhs they have shared, and they retained 40 lakhs. Is it clear? So 40 lakhs is what they have retained, who lead insurer has retained. So retained 40 lakhs, retained 40 lakhs. Now what is the treatment? What was the treatment before this amendment? Before this amendment, what we used to do? Simple. Lead insurer A will pay GST on 1 crore. Lead insurer A will pay GST on 1 crore, and whenever they are making the payment of 25 lakhs, 30 lakhs and 5 lakhs, they used to ask insurance company B to pay GST on 25 lakhs and raise invoice to insurance company A. So I am talking about before amendment part. Before amendment, what has happened? Okay, before amendment I am talking about what has happened. Before amendment, what used to happen is that, so insurance company A, and there will be insured. So insurance company A will raise invoice for 1 crore, accordingly their gross liability, output tax, if you see, so 1 crore into GST, let's take 18% they used to pay. Thereafter this insurance company B, insurance company C, insurance company D, so insurance company B will raise invoice for what? Invoice for 25 lakhs. 25 lakhs is what they have got now. So 25 lakhs. Insurance company C will raise invoice for 30 lakhs, and insurance company D will raise invoice for 5 lakhs. Got it? Now insurance company B, when they pay GST on 25 lakhs, they will pay GST on 25 lakhs, okay, and as they raise the invoice, so there will be input tax credit. So what is that input tax credit? That input tax credit will be 25 plus 30 plus 5 that is 60 lakhs, 60 lakhs into 18%. So net amount is what they will be paying as GST. So B will pay GST on 25 lakhs, C will pay GST on 30 lakhs, D will pay GST on 5 lakhs, and A will pay GST on 1 crore. And B, C, D, whatever GST they paid, that A will be able to take ITC and adjust against the GST liability. This was the position before the amendment. Okay. Now, after amendment, what has happened here? After amendment, what has happened? After amendment, so because of this addition of this co-insurance services, where lead insurer distributes the money to the other insurers, is excluded from supply. That is amendment. What is amendment? Insurance company A collecting 1 crore is not excluded from supply. That is covered under supply. Insurance company A in turn will distribute the money to B, C, D. That was excluded from supply. So which means here what happens? So insurance company B, insurance company C, insurance company D will not raise any invoice. So whatever services that are, whatever money that is collected by them is excluded from supply, not a supply. So that 25 lakhs, and so whatever money that they are receiving, who is receiving? B is receiving from A, and C is receiving 30 lakhs from A, and D is receiving 5 lakhs from A. All these three is not a supply. All these three is not a supply, which means will not be chargeable to any GST. But A is collecting 1 crore A is collecting 1 crore from insured. A is collecting 1 crore from insured. That 1 crore is treated as supply. That 1 crore is treated as supply, and A is required to pay GST on rupees 1 crore. Is it clear? That is post amendment. Why it is like this? A has to pay. See, even before amendment also A used to pay GST on 1 crore. Now also he will be paying GST on 1 crore. But previously they used to get the input tax credit, means effectively they used to pay only on retain. That is, what is it, retain? 40 lakhs. But now what has happened is that B, C and D, that is the other insurers, co-insurers, will not be paying any GST. It is excluded from supply. Only the lead insurer will pay GST, that is on 1 crore. Okay, that is with respect to this year. And so that is what you can see here in the point. So apportionment of co-insurance premium by the lead insurer to the co-insurer. Apportionment of co-insurance premium by the lead insurer to the co-insurer. Okay. In co-insurance agreements or arrangements where multiple insurers provide coverage, in co-insurance arrangements where multiple insurers provide coverage, the lead insurer often collects a premium from the insured and distributes a portion to the co-insurers. The proposed provision treats this apportionment of premium between the lead insurer and co-insurer as neither supply of goods nor supply of services, provided the lead insurer paid GST on the entire premium. See this, provided that the lead insurer paid GST on the entire premium paid by the insured. So see this question related to that point. Question number 1. The New India Assurance Company Limited, a registered insurance company in India, enters into a co-insurance agreement with ICICI Lombard General Insurance Company to jointly provide insurance coverage to Reliance Industries Limited. So New India Insurance, New India Assurance is one company. Another company is ICICI Lombard General Insurance. Okay, these are the two insurance companies. So New India Assurance and ICICI Lombard. So to jointly provide, what is that? To jointly provide insurance coverage to Reliance Industries Limited. The total premium paid by Reliance Industries for the policy is rupees 10 crore. As per the co-insurance agreement, New India Assurance acts as the lead insurer, collecting the entire premium from Reliance Industries and subsequently apportions 40% of the premium to ICICI Lombard. So basically two insurance companies. What are they? New India and ICICI Lombard. they provide services to Reliance Industries. What is the total amount of premium? 10 crore. And what happens is that New India Assurance acts as the lead insurer. They collect 10 crore and 40% of the premium, 4 crore they are giving to ICICI Lombard. New India Assurance pays GST on the entire premium amount of 10 crore as required by the law. The applicable GST on insurance and reinsurance is 18%. Calculate the GST liability for New India Assurance on the premium collected from Reliance Industries Limited. So what is the GST, gross GST, net GST, both are same. They will not be able to take ITC because the other person is not required to pay any GST na. So 10 crore into 18%, that will be 1 crore 80 lakhs will be taken, 1.8 crores. Then that is the answer for this first part. So services provided by New India Assurance Company Limited to Reliance Industries Limited against consideration of rupees 10 crore, it's treated as supply under 71A, GST payable by New India Assurance and FCM. So 10 crore into 18%, 1 crore 80 lakhs. Then determine if ICICI Lombard General Insurance Limited is liable to pay any GST on the 4 crore premium apportioned to it. No, they are not required to pay any GST. So ICICI Lombard General Insurance providing co-insurance to lead insurer against a consideration of 4 crores is excluded from supply as the lead insurer paid GST on the total premium. Okay, as the lead insurer paid GST on the total premium. So due to that reason there is no GST here. Next, on whom? On New India Assurance. Second part. That is the second part. Third part. What will be your answer? So the first part is calculate the GST liability. The second part is determine if ICICI Lombard General Insurance is liable to pay. Third part of the question, you see, what will be your answer if New India Assurance is not paying GST on the entire premium of 10 crore, but instead pay GST on the share retained by them. So definitely it amounts to short payment of tax. Why it amounts to short payment of tax? They are required to pay GST on 10 crores. Okay. If New India Assurance is paying GST on 6 crore, then the share of premium received by ICICI Lombard is not excluded from supply. Because what does the law says? The law says that, here they need to pay GST on 10 crores. If they pay GST on 10 crores, the money received by ICICI Lombard is excluded from supply. Consequently, GST payable by ICICI Lombard on rupees 4 crores. That's what the provision says. But practically what happens here is that, because the provision says if provided that the lead insurer pays the GST on the entire premium paid by the insured. That point is clearly mentioned for that reason. So this condition is clearly given in the law. So therefore, as this proviso they have kept, which means in this case, if the lead insurer is not paying GST on entire amount, not on entire 10 crores, then what will happen? So ICICI Lombard Insurance is not excluded from supply. Consequently, GST is payable by ICICI Lombard on 4 crores. But there is a short payment of tax by this New India Assurance. How there will be short payment of tax? What is the money that they collected? 10 crores. So the transaction value determined under section 15 will be 10 crores. However, in the present case, New India Assurance violated the provision of section 15 by paying GST on 6 crores instead of paying GST on rupees 10 crores. So there is a violation, and this is what we need to just write, that as they have brought in the proviso, we need to see. So look into this Bear Act also. So activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for the insurance service jointly supplied by the lead insurer and the co-insurer to the insured in co-insurance agreements, subject to the condition that lead insurer will pay GST, okay, as the case may be, CGST, SGST, UTGST or IGST on the entire amount of premium paid by the insured. As they have kept that provision there, condition there, then only it is excluded. That's why we are arriving at the answer like this. But this note we need to write that New India Assurance is not complying with section 15 because the transaction value should be taken as 1 crore. Okay, here what is that? 10 crores, but instead they are paying GST only on 6 crores. Okay, that is the answer for this question. This is how you may get a question on amendment related to this. Then look into the second part of exclusion. So first exclusion is co-insurance services jointly supplied is excluded. Second one, reinsurance commission. What is this reinsurance commission means? Generally, what happens here? Here there is no concept of co-insurance. Co-insurance is over. There is a concept of reinsurance. Okay, so that reinsurance is what we are trying to understand. Let's see with an example to understand this particular part. There is a insurance company. There is a insurance company 1. There is a insurance company 1. This insurance company 1 or insurance company A, what they are doing is that they are providing the insurance services to the insured. To the insured, they are providing insurance service. Insurance service. But what happened is that this insurance company has too much of risk exposure. So say for example the same 400 crores. Now they wanted to reduce that risk exposure, means if anything happens to the insured, the insurance company A should pay 400 crores. That's a huge risk. So due to that reason, insurance company A will take reinsurance with insurance company B to mitigate that risk, which means insurance company B is providing reinsurance service to insurance company A. Okay. Now, whatever premium that is received by the insurance company A, say for example, they are receiving a premium of 40 lakhs. They are receiving a premium of 40 lakhs. Who? Insurance company A. What insurance company A is doing? They are giving the reinsurance company some premium they are sharing. Say for example, 15 lakhs they are sharing with reinsurance company. Up to this clear? So what happened? Insurance company A received 40 lakhs, insurance company B received 15 lakhs. Now what happens? Simple. Insurance company B will raise invoice on insurance company A for 15 lakhs. So invoice for 15 lakhs, invoice for 15 lakhs, and which they will be able to take ITC, and again insurance company A will raise invoice for 40 lakhs. On insurance company B, no doubt this is clear. But generally insurance company B is getting this 15 lakhs income they are getting. Normally if they need to get this 15 lakhs, they need to appoint one agent now. Normally if they need to get this 15 lakhs, they need to appoint one agent. So due to that reason, so if they appoint an agent, they need to pay the commission. Am I right? They need to pay the commission. But here insurance company A is bringing them the business. To whom? Insurance company B, means that commission insurance company B has to pay to insurance company A. So insurance company B will give a commission to insurance company A. Will give commission to insurance company A. How much is that commission? Say 1.5 lakhs is given as commission. Got it? On that, insurance company A should pay GST. Correct? So before amendment, what was happening? Let's see. This is the story. Now before amendment, what was happening? Before amendment. So first we will see before amendment what has happened. Before amendment. First, we will take insurance company A. What insurance company A used to do? So they will pay GST on rupees 40 lakhs. That is normal insurance services, insurance premium. So insurance service, normal insurance service 40 lakhs they got. 40 lakhs into 18%, they will pay GST. Okay, so 40 lakhs into 18%, how much that comes to? 40 lakhs into 18%, that is 7 lakh 20,000. Thereafter Commission also they are getting na, they are receiving commission. So what is that commission that they are getting? 1.5 lakhs they are receiving as commission into 18%. So 1,50,000 into 18%, that comes to 27,000 they are receiving na. So they need to, and this is their gross liability, gross GST payable. Gross GST payable will be 7,20,000 plus 27,000, 7,47,000 minus ITZ. What is the input tax credit? So what is their inward supply? Insurance company B will raise invoice for 15 lakhs na. So that will be ITZ. So 15 lakhs into 18%, they are getting the ITZ. So 15 into 18%, that is 2,70,000. If you reduce the net GST payable, the net GST payable by them will be 7,47,000. 7,47,000 minus 2,70,000, 4,77,000 will be taken as the net GST payable by whom? By insurance company A. Now insurance company B. Insurance company B. So insurance company B, what is happening? What is their gross liability? So gross GST payable. The gross GST payable, if you see, so what is the insurance service that they provide? 15 lakhs. On that 15 lakhs, 18% they need to pay, that is 2,70,000, and they will get a ITC. What ITC? Commission. Who is paying GST? Insurance company A is paying GST on commission. So this is an inward supply to insurance company B because they are giving the commission. So therefore on that 15 lakhs, they will get ITC. So ITC will be, sorry, 1.5 lakhs. 1.5 lakhs into 18%. 1.5 lakhs into 18%, that is 27,000. So what is that? So 2,70,000 minus 27,000, that will be 2,43,000 will be taken as the GST. What is the total revenue to government? What is the total revenue to government? 4,77,000 plus 2,43,000. 4,77,000 plus 2,43,000, 7,20,000 is the total revenue to government. This is before amendment. This is what we used to do before amendment. Now post amendment, what is happening? Let's try to understand after amendment what is happening. After amendment they are telling the commission which is retained, commission which is retained by whom? Which is retained by insurance company A, GST not payable, which means insurance company A will not pay GST of this 27,000. Okay, so the same situation will come. The same situation will come, but only difference is what? Only difference is that same situation, one second, same situation. Okay, only difference I will tell you after amendment what is happening. After amendment, the insurance company A will not pay GST on this 27,000. So the gross liability will be 7,20,000 minus 2,70,000. So 7,20,000 minus 2,70,000, that will come to 4,50,000. This is in case of insurance company A. But what is not payable? On the commission GST not payable. On the commission GST not payable. Sir, what about insurance company B? Insurance company B will pay GST on the gross amount. There is no question of ITC. There is no question of ITC. Insurance company B will pay GST on the gross amount, which means this 2,43,000 will not be there, and just the gross GST payable 2,70,000. Now what is the total revenue to the government? The total revenue to the government is 7,20,000 only. So 4,50,000 plus 2,70,000, that will come to 7,20,000. There is no change in the revenue to government. So what is excluded from supply? On the commission which is retained by the insurance company, GST not payable. On the commission which is retained by the insurance company, GST not payable. So reinsurance commission is excluded from supply. Reinsurance commission is excluded from supply. So have a look into this. Reinsurance commission is excluded from supply. Read this. Services by insurer to reinsurer, for which they get a reinsurance commission or ceding commission. In reinsurance agreements, the insurer pay a premium to the reinsurer while deducting a commission. So what is the name of that commission? Ceding commission or reinsurance commission as a part of the arrangement. The proposed insertion clarifies that the provision of these services by the insurer to the reinsurer will not be treated as supply. However, this is subject to the condition that reinsurer discharges GST liability on the gross insurance premium. Sir, what if insurance company B is not paying GST on 15 lakhs into 18%, but they took the ITs, like they have reduced it, means they paid GST only on the net amount. So 15 lakhs minus 1.5 lakhs, 13.5 lakhs. Then in that case, so this particular exclusion from supply is not applicable to insurance company A. That is what is subject to the condition that reinsurer discharges the GST liability on the gross reinsurance premium, which includes the reinsurance commission or ceding commission. Okay. Sir, is it given like that proviso? Yes. Read this. Another point. Services by insurer to reinsurer. What is that? Insurer A to reinsurer, for which ceding commission or the reinsurance commission is deducted from the insurance premium paid. They are not going to pay full amount. So 15 lakhs minus 1.5 lakhs, 13.5 lakhs is what they pay. So see here. So how much is the money that they have to remit? They have to remit, 15 lakhs, but already anyhow they need to get a commission of 1.5 lakhs. So effectively they will be remitting 13.5 lakhs. That's what they are trying to convey. Okay. So premium by the insurer to the reinsurer, subject to the condition that, here again they gave, subject to the condition that central tax, state tax and integrated tax is paid by the reinsurer on the gross premium payable by the insurer to the reinsurer inclusive of the said commission. Means reinsurer should pay GST on the 15 lakhs, even though they effectively receive 13.5 lakhs, but they need to pay GST on 15 lakhs. That is a condition. So that's what I have also simplified, and I have given that provided it's subject to the condition that reinsurer discharges GST liability on the gross insurance premium. So what are the two exclusions from supply that we have seen now? Number one, the co-insurer getting the share of premium from lead insurer is excluded from supply, provided the lead insurer pay GST on the gross amount. Point number two, the reinsurance commission which is received by the or retained by the insurer from reinsurer, okay, which is retained by the insurer, is also excluded from supply, provided reinsurer pays GST on the gross amount. Okay. So in simple words, you can remember, insurance services jointly supplied is excluded from supply, and reinsurance commission is also excluded from supply. Okay. Now related to this reinsurance commission, I gave one illustration. Have a look into this. Question number 2. New India Assurance reinsures a part of its risk with GIC, General Insurance Corporation of India, a domestic reinsurer. The gross reinsurance premium paid by New India Assurance to GIC is rupees 5 crore, but New India Assurance deduct a 20% ceding commission, that is 1 crore, before making the payment. So what is the reinsurance commission? They need to give 5 crore. From 5 crore, 1 crore is the commission they have to get. So 5 minus 1. Okay. So that's what they are doing. GIC is responsible for paying GST on gross premium inclusive of the ceding commission. The applicable rate of GST on insurance and reinsurance is 18%. So what is the first question? The first question is, calculate the GST liability for GIC on the gross insurance premium, reinsurance premium of 5 crore including the ceding commission deduction. So they have to pay GST on gross amount 5 crore. So 5 crore into 18%, that will be 90 lakhs. Next, number 2, calculate the GST liability on New India Assurance on the services provided by them to GIC for which commission is deducted. So on that there is no GST, it is excluded from supply. That commission is excluded from supply, consequently GST not payable. Next, number 3, what will be your answer if GIC not paid GST, that is reinsurer not paid GST on gross premium but paid GST on the net premium, means 4 crores, which means the insurer has to pay GST on the commission, which means reinsurer is required to pay GST on the commission. If reinsurance concentrate. If reinsurer GIC, okay, if reinsurer GIC paid GST on 4 crores, then services by insurer, who is that insurer? New India Assurance, okay, insurer New India Assurance to reinsurer GIC is not excluded from supply. Consequently, GST payable by insurer, so with respect to commission, 1 crore into 18%, 18 lakhs. But the problem is that again here there is a violation. GIC is doing violation. What violation? They have received and they have to pay GST on, so the entire amount. What is that entire amount? 5 crores, but they pay GST only on 4 crores. So they violated the provision of section 15 by not paying on the transaction value. This is the note that we need to write, okay. That is with respect to this particular amendment. And we have one more question, that is actually a final RTP question. They gave it in RTP for CA final. So we will see that question. ABC Insurance Limited, a registered insurer in Maharashtra, is engaged in providing insurance services. During the current financial year, the company entered into following transactions. ABC Insurance Limited enters into a co-insurance agreement with XYZ Insurance Limited, where ABC Insurance Limited is a lead insurer. ABC is lead insurer. The insured, Gyathi Industries, pays a total premium of 50 lakhs, which is apportioned by the lead insurer ABC Insurance Limited between itself and XYZ Insurance in the ratio of 60:40 for the insurance service jointly supplied by them to Gyathi Industries. ABC Insurance Limited agrees to discharge the entire GST liability on the full amount of premium received from Gyathi Industries. Then in that case, okay, what will be your answer? So that is the first part. Second part also they have given. Now, based on the provisions of Schedule 3, second part we will see later, but based on the provisions of Schedule 3 of CGST Act, discuss whether the following activities amount to supply. Apportionment of co-insurance premium by ABC Insurance to XYZ Insurance Limited for the services jointly supplied by them to Gyathi Industries. No, it is excluded from supply. That is the share of premium received by ABC from XYZ. So, lead insurer. So, insurance activity of apportionment of co-insurance premium by the lead insurer to the co-insurer for insurance service jointly supplied by the lead insurer and the co-insurer to the insured is neither supply of goods nor supply of service, and no GST is charged on the apportionment transaction. However, the lead insurer, what is the important condition? The lead insurer is required to pay entire GST on the full premium amount by the insured, that is Gyathi Industries, of rupees 50 lakhs. The co-insurer XYZ Insurance does not pay GST on its share of premium separately. Got it? Simple question only it is. Then second part. A large industrial plant needs an insurance worth rupees 500 crore. It approaches ABC Insurance Limited for the same. However, since ABC Insurance Limited is unable to underwrite the entire risk alone, it enters into a reinsurance agreement. It enters into a reinsurance agreement with reinsurer PQR Insurance Limited. The total premium charged is 50 lakhs. The insurer ABC Insurance Limited pays a reinsurance premium of 20 lakhs to PQR Insurance Limited. So, how much they are getting? They are getting 50 lakhs. They are sharing 20 lakhs. PQR Insurance Limited. This allows ABC Insurance Limited to manage the risk and financial exposure. While paying this amount to PQR Insurance, ABC Insurance deducts a ceding commission of 1 lakh. What is the treatment of that 1 lakh? It is excluded from supply, but provided that another reinsurer is there, that is PQR, has to pay GST on 20 lakhs. Even though they receive 20 minus 1, 19 lakhs, but they need to pay GST on 20 lakhs. Okay. On which it charged for the service it provides to PQR Insurance Limited. PQR Insurance Limited pays GST on the gross reinsurance premium, including the ceding commission. Now, what is the question here? Services by ABC Insurance to PQR Insurance Limited for which ceding commission is deducted from reinsurance premium paid by ABC to PQR, is it subject to GST? Is it supply or not a supply? For which it is not a supply. That is, Yeah, ABC is getting commission of 1 lakh na, on that are they required to pay GST? No, it is excluded from supply, provided that PQR reinsurer pay GST on the gross insurance reinsurance premium. The reinsurer PQR is liable to pay GST on the gross reinsurance premium, that is 20 lakhs before this deduction of 1 lakh. Then in that case, that 1 lakh which is earned by the insurer is excluded from supply. Got it? So, services by insurer to reinsurer for which ceding commission is received is excluded from supply. That is about this particular amendment. So, final summary, what you need to remember is that in case of co-insurance, the co-insurer receive premium from the lead insurer which is excluded from supply. Condition: the lead insurer should pay GST on the gross premium. Point number 2. Point number 2, the commission which is earned by the insurer from reinsurer is also excluded from supply, provided the reinsurer pays GST on the gross premium which they have received. Okay, these are the 2 points you need to keep in mind. Now we are moving on to the next amendment, that is related to the penal charges being levied by the regulated entities. So let's try to understand some background related to this. Already there was one circular which talks about liquidated damages. So liquidated damages, how it should be treated? Liquidated damages will be first divided into mere compensation. Liquidated damages means what? So some amount which is collected by the person so who suffers the breach of contract, and from the person who breaches the contract. For example, if you breach the contract, you will be giving me liquidated damages because I suffer the damages. Okay, some money you will be giving me. If that is compensatory nature means what? There is no possibility of performance. There is no possibility of performance. I suffered, and for which you are just giving me to relieve me from that suffering. But of course, the possibility is not there. Then it will be coming under compensatory nature. For example, say we are driving a car. When we are driving a car and we hit one person and that person is dead. Now the court will tell you pay 20 lakhs compensation. That 20 lakhs compensation will be not coming under possibility of performance, that is compensatory nature. Then the contract is abruptly stopped. When the contract is stopped, not that it is provided but late, no, not that, it is completely stopped. In that case also it will be compensatory in nature and it will not be treated as consideration, the money received. Suppose if it is penal in nature, to discourage a person from doing such act. Example, traffic fines, then fines and penalties under any law, that is income tax penalty or GST penalty, etc. And even we have this check dishonor charges. All these are penal in nature. To discourage a person from doing it, then it will be coming under consideration or not treated as consideration. That is also not treated as consideration. Consequently, it is not a supply. All others other than compensatory in nature, other than penal in nature, remaining and all will be treated as consideration, but the taxability is dependent on the taxability of its principal supply. For example, train ticket cancellation charges. Train ticket cancellation charges will be taxable if the train ticket is taxable. If the train ticket is exempted, the ticket cancellation charges is also exempted. Why won't ticket cancellation charges come under compensatory nature? It is not compensatory nature because the ticket they can sell it to some other person also. Number 2, so is it penal in nature to discourage a person? No. If he is not traveling, let it cancel so that that seat can be allotted to some other person. So it is not to discourage the person from doing such act. So therefore it will be coming under others. This is the circular which was already there. Now what is this circular about? Generally these banks, financial institutions, NBFCs, etc. and all, when you are not repaying the EMI, they will be levying something called as penal interest. But RBI recently gave a circular stating that the banks, financial institutions and NBFCs, that is regulated entities, should not be collecting penal interest. Instead they should call it as penal charges. Instead they should call it as penal charges. See this. As per RBI instructions dated 18 8, 2023, regulated entities. Who are those regulated entities? Like banks and NBFCs must replace penal interest with penal charges for non-compliance with loan terms effective from 1/1/2024. These instructions do not apply to credit cards, external commercial borrowings, trade credits or structured obligations. But this is only for loans, not for credit cards, not for ECB, trade credit, etc. It is only for normal loans. So this particular circular is not applicable for credit card. Then for credit cards, still they can levy penal interest? Yes. And will it be taxable? Of course, yes. Why penal interest will be taxable? Because the interest on credit card is taxable, so penal interest is also taxable. Remember this. If the interest involved in EMI is taxable, penal interest is also taxable. If the interest involved in EMI is exempted, penal interest is also exempted. This is the concept of penal interest. For credit card, still penal interest is only there. The intent of penal charges is to promote credit discipline and not to treat them as consideration for tolerating an act. So, which means the intention is what? To discourage a person from doing it. Referring to earlier circular on liquidated damages, one old circular, CBIC clarifies that such penal charges are for breach of contract and it is not treated as consideration. Why it is not treated as consideration? Because the same is to discourage a person from doing so. Okay, penal in nature, and therefore it will not be liable to GST. So that is a treatment of penal charges. What if it is penal interest? Penal interest means definitely if the main interest involved is taxable, penal interest is also taxable. Main interest involved is exempted, penal interest is also exempted. Got it? And when main interest will be exempted taxable? If it is interest on loans, advances, deposits, it will be exempted. If it is interest on account of delay in receipt of consideration, then it will be taxable. Like that we need to treat. Okay. Now look into this question number 4. Mr. Rahul Mehra availed a car loan of rupees 12 lakh from HDFC Bank Limited on 10th January 2024. The loan agreement clearly specified that timely EMI payment on 5th of every month was a material term. Rahul defaulted on his EMI for April and May 2024 as per RBI circular dated 18/8/2023. HDFC Bank levied a penal charge, not penal interest, penal charge of 1500 per default instead of penal interest. On 10th June, the bank raised a debit note for 3000, that is 1500 into 2 months, and charged 18% GST on the penal charges. Simultaneously, Rahul also holds a credit card with Bajaj Finance Limited. He delayed the credit card bill payment due on 15th May, for which Bajaj Finance levied a late payment charge of 750 along with 18% GST. Citing it as a standard practice for credit card dues. Rahul has now approached you as his GST consultant to understand whether HDFC Bank is correct in charging GST on penal charges levied for loan EMI default. No. Why? Because penal charges are in the nature of penalty to discourage a person from doing it, so to maintain the credit discipline. So these penal charges are treated as consideration or not treated as consideration? Not treated as consideration. Consequently, GST is not payable. HDFC Bank is an RBI regulated entity and the default loan is a car loan, a standard term loan falling under RBI circular. So penal charges are levied in the place of penal interest. As clarified by CBIC, these charges are not for tolerating an act but are deterrent in nature and part of loan compliance framework. Hence, HDFC Bank is incorrect in charging GST on penal charges of 3000 rupees. Okay, sir. What about the late payment charges collected by Bajaj Finance on credit card? This particular RBI circular is not applicable for credit cards, correct? Not applicable for credit cards. Credit card dues are explicitly excluded from the purview of RBI circular. Such charges are typically included in the product specific guidelines under credit card operations, where CBIC in some earlier clarification clarified that late payment charges on credit card dues are treated as supply. Why? I told you, as the interest involved in credit card is taxable, the interest, late fee, penalty for delay in receipt of credit card is also taxable. That late payment charges on credit card dues are consideration for supply of financial service and hence liable to GST. Circular on liquidated damages is not applied in this case. Sir, here also it is penal in nature, na sir. Correct. But there is another circular which says that so penal charges, that is late fee or interest on credit card, will be taxable like that. Another circular is there. That's why this circular on liquidated damages is not applied. Therefore, GST is applicable on late payment charges related to credit card dues, and Bajaj Finance is correct in charging GST on 750. So keep that in mind. That particular liquidated damages circular is not applicable, even though here that late payment charges may be there, but because there is another circular which clearly clarified that credit card late fee will always be taxable. Interest, late fee or penalty for delay in receipt of credit card dues will be taxable. Keep that in mind. Okay. So like this they can connect the points and they can make a question. Okay. The next amendment that we are going to see is related to liability to pay GST. In this, so we have RCM, we know that section 9 subsection 3 read with notification 13/2017, we have some list of activities, list of services which are covered under RCM. In that, renting of immobile property, what was the provision? Renting of immobile property, previously we had some exemptions. So if it is a residential property, we have 3 exemptions for residential property, that is renting of residential property for residential purpose to an unregistered person is exempted. Renting of residential property for residential purpose to a registered individual for his family stay, for their family stay, that person individual's family stay is exempted. Number 3, accommodation services where the consideration does not exceed 20,000 rupees per month and accommodation is given for a continuous period of 90 days. This accommodation point is common even for commercial property also. For commercial property also we have this exemption of accommodation services. So whenever there is a property, that may be a residential property or a commercial property, which is being given on accommodation for a continuous period of 90 days, minimum continuous period of 90 days means greater than or equals to 90 days, where the value is less than or equals to 20,000 per month is exempted. This is the exemption, no change in that. But there is a change in the condition for RCM. For commercial property, when RCM will be applicable, if the supplier is unregistered and the recipient is registered, it will come under RCM. This was the condition before amendment. Before this amendment, previously for renting of commercial property, when it will come under RCM, supplier should be unregistered, the recipient should be registered, then it will be RCM. Now they added one point, supplier should be unregistered, recipient should be registered, but not opting for composition scheme. What if the recipient is registered but opting for composition scheme? RCM will not be applicable. Okay, so say this, supplier should be unregistered, that's the first point, and recipient should be registered but not opting for composition scheme. What if the recipient is opting for composition scheme? If the recipient is opting for composition scheme, then FCM only will be applicable, RCM will not be applicable. So what is that? First we need to check. See the flow chart. So the flow chart will be simple here. So first, what is that you need to check? Is it renting of immobile property or not? We need to check. Okay. So is it renting of commercial property? Is it renting of commercial property? Renting of commercial property. Renting of commercial property. Okay. After that, renting of commercial property, we need to check how the supplier is. Is the supplier registered or unregistered? We need to check. Okay. So supplier is registered. Supplier is registered. If it is yes or no, supplier is registered, yes, supplier is registered. Don't check anything. If it is not, okay, renting of commercial property, if taxable, if taxable, if taxable. If it is exempted, then we will not discuss this. If taxable. So what is the exemption? Just now we saw accommodation service. Supplier is registered, yes. Then who will pay GST? FCM. Supplier only will pay GST. Don't check anything else. Don't check anything else. Supplier only will pay GST. If supplier is not registered, okay, if it is no, supplier is registered, no, means not registered, then check whether recipient is registered. Recipient is registered. This is also, no, this is also no. Supplier is also unregistered, recipient also unregistered. Definitely there is no GST. Why there is no GST? Because both are unregistered na. Supplier is also unregistered, recipient also unregistered. Definitely there won't be any GST between two unregistered persons. If there is a transaction, GST will not be applicable. So no GST. Yes, recipient is registered. Recipient is registered. What we used to do before, we used to take it as RCM. But now, one more point you need to check. What is that one more point that you need to check? Registered, but is he under composition scheme? Recipient under composition scheme. Recipient under composition scheme. Okay. Suppose if it is yes, then RCM will not come, FCM only. So actually here also it is FCM, previous case na. Supplier is not registered pa, recipient is also not registered, means RCM will not come. If RCM is not applicable, then FCM, but no GST. Charge is FCM, but GST not payable. Why not payable? Because the supplier is not registered. Same way here also, whether the recipient is under composition scheme, recipient is registered, but whether they are under composition scheme, yes, then also FCM, means RCM will not come, but there is no GST. Why there is no GST? Because supplier is unregistered. But in the first case, GST payable. Why first case GST payable? That is the first case of FCM. Why GST payable? Because the supplier is registered. Okay, again I am repeating, renting of residential property, that is commercial property. If supplier is registered, no doubt supplier only will pay GST. If supplier is not registered, then check whether recipient is registered. No, then also it will be FCM. Whether GST payable or not payable, because the supplier is unregistered. RCM not applicable because the recipient is registered. Okay, then again check whether the recipient is under composition scheme. Yes, then also RCM not applicable, it is FCM, because the recipient should not opt for composition scheme, but there won't be any GST. Why there is no GST? Because the supplier is unregistered. It is coming under FCM, but the supplier is unregistered. So now recipient is under composition scheme, no. Supplier is unregistered, recipient is registered and not under composition scheme, then it will be RCM, where liability to pay GST is on recipient. So this is what you need to keep in mind. Okay, so what are the two conditions for commercial property coming under RCM? Supplier should be unregistered, recipient should be registered but not opting for composition scheme. If supplier is registered, always FCM. If recipient is under composition scheme, also it will be FCM only, RCM will not be applicable. That is what I have given there. So non-applicability of RCM, supplier is registered or recipient is opting for composition scheme. Then next, yes, for sponsorship services. In case of sponsorship services, what we have studied, we have exemption for sponsorship. One exemption, what is that? That is sponsorship of a recognized sporting event is exempted, correct? Sponsorship of a recognized sporting event. What is a recognized sporting event? So there are 6 sporting events: National Sports Federation, Inter-University Sports Body, and then Paralympic Committee, Central Civil Services Cultural and Sports Board, then Indian Olympic Association, Panchayat Sports Board. These are the 6 recognized sports bodies. If the sponsorship money is collected by them, it will be exempted, otherwise it will be taxable. And what are the conditions for RCM? We studied already. Supplier, that is recipient, should be body, corporate or firm. For sponsorship services, supplier is the organizer of event, recipient should be body, corporate or firm, that is the one who pay the sponsorship money is body, corporate or firm, then it will be coming under RCM. But now what is the amendment? The amendment is that supplier should be other than body, corporate. They added this point. Previously only recipient should be body, corporate or firm, but now they added one point: supplier should be other than body, corporate or firm. See this, supplier is other than body, corporate, not firm. Supplier is other than body, corporate. Supplier can be firm, supplier can be individual, supplier can be AOP, supplier can be BOI, but they should be other than body, corporate. and recipient is body, corporate or firm, then only it will be coming under RCM. What if supplier is body, corporate? Supplier only will pay GST. You got it? So for example, if a company is organizing an event, the company only will pay GST. So if the supplier, that is organizer, is other than body, corporate, then only we need to check the recipient. Okay. What if supplier is body, corporate? By default it will be FCM. So if recipient is other than body, corporate or firm, also it will be FCM. So the same way, that flowchart we will see for sponsorship services. This is for renting of immobile commercial property. Now we will see for sponsorship services what should be taken. Okay. So first, for sponsorship services, so in case of sponsorship services, we need to see, and provided if taxable, if taxable, what is that? First you need to see, supplier is body, corporate, supplier is body, corporate, supplier is body, corporate. If the answer is yes, supplier is body, corporate, then FCM, definitely FCM. Supplier is body, corporate. Who is the supplier pa? The supplier will be nothing but the organizer of the event. Organizer of the event will be taken as the supplier, correct? And supplier is body, corporate means it will always be FCM. Suppose if it is no, supplier is not body, corporate, then check the recipient. Is recipient is body, corporate or firm? Recipient is body, corporate or firm? Recipient is body, corporate or firm? If it is yes, recipient is body, corporate or firm, yes, then who will pay? RCM. It will come under RCM. Okay. Suppose if it is no, recipient is not body, corporate or firm, supplier is not body, corporate, recipient also not body, corporate or firm, then also it will be coming under FCM. Supplier only will pay. Suppose supplier is not body, corporate, recipient, supplier is not body, corporate, so we are checking recipient also is body, corporate or firm. Okay, then it will be RCM. Just check this. Okay, what is it we need to see? First check whether supplier is a body, corporate or not. Yes, supplier is a body, corporate, definitely it will be coming under FCM. Supplier is other than body, corporate, then we need to check whether recipient is body, corporate or firm. No, then it is FCM only. Suppose if the recipient is body, corporate or firm, then it will be coming under RCM. So that's how we need to determine. Is it clear? Next, so that's what I have given here. So condition, non-applicability of RCM, supplier is body, corporate or recipient is other than body, corporate or firm. Now look into some questions based on this. Question number 1. Who is liable to pay GST in the following scenarios in case of sponsorship services? Mr. Ramesh, an unregistered individual, it is sponsorship services. Okay, Ramesh is an unregistered individual, supplier other than body, corporate, let out his commercial shop. Okay, actually it is not sponsorship, it is renting of immobile property. Sorry. So in case of renting of commercial property, renting services, in case of renting services, Mr. Ramesh lets out his commercial shop to Sky Retail Private Limited. So supplier is unregistered and recipient is registered on a monthly rent of 25,000. Will it come under RCM? Of course it will come under RCM. Why it will come under RCM? Because supplier is unregistered and the recipient is registered but not under composition scheme. Next, number 2. Suresh is a registered individual, lets out his commercial property to Messrs. Tej Foods, a restaurant registered under composition scheme for a monthly rent of 40,000. Definitely FCM. Why? Supplier is registered. When supplier is registered, don't check anything else. Supplier is registered, definitely it will be FCM. Next, number 3. Mr. Rajesh, unregistered individual, lets out his commercial complex to Messrs. A1 Mobiles, a trader registered under composition scheme. Now in this case, who will be paying GST? So supplier unregistered. Recipient is registered but opting for composition scheme. It will be FCM only, but there is no GST. Why there is no GST? Because the supplier is unregistered. Supplier is unregistered, recipient is registered, and the recipient is opting for composition scheme. Then in that case it will be FCM, RCM not applicable, but as supplier is not registered, you should write GST not payable. That's how we need to arrive at the answer. Okay. Look into question number 2. Who is liable to pay GST in the following scenarios in case of sponsorship services? So for sponsorship services, Tata Steel Limited sponsors a sports event organized by Green City NGO. Who is supplier? The one who is organizing is the supplier pa. The one who is organizing. So this Green City NGO is the supplier. Registered as a society but not as a body corporate. Registered as a society but not as a body corporate, means supplier is other than body corporate, and the recipient is Tata Steel Limited, which is a body corporate. Recipient is a body corporate. As recipient is a body corporate, it will definitely be coming under RCM, because supplier is other than body corporate, recipient is body corporate or firm. Okay, so this is as per amendment. Next, second case, ABC Private Limited, a registered partnership firm, is the recipient of sponsorship benefit and brand display with respect to event hosted by Paper Mills Limited. So event hosted by Paper Mills Limited means the supplier, the one who is hosting the event. Paper Mills Limited is the supplier. Supplier is body corporate. So definitely it will be FCM. As supplier is body corporate, no need to see further. It will be coming under FCM. Okay. As supplier of sponsorship service is body corporate, RCM not applicable and it will be FCM. And recipient can be anyone. So basically ABC Private Limited, a registered entity, is the recipient of sponsorship services. Then Regal Foundation of Commerce organized a business summit in Surat, Gujarat, in which all the startups were invited to pitch their business ideas. Pandit Jewels Private Limited, registered in the state of Maharashtra, sponsored the summit and paid a sponsorship fee of 1,50,000 to Regal Foundation of Commerce. You are required to determine who is the person liable to pay tax if Regal Foundation of Commerce is a body corporate. Regal Foundation is the organizer, means they are the supplier. As the supplier is body corporate, it will be coming under FCM. What if they are not a body corporate? If they are not a body corporate, see the recipient. So who is the recipient? Pandit Jewels Private Limited, body corporate. So therefore it will be coming under RCM. Supplier other than body corporate, recipient is body corporate or firm. Okay, firm means partnership firm, includes LLP. So first case, in case of service provided by way of sponsorship service to any body corporate or partnership firm by any person other than body corporate, the recipient is liable to pay under reverse charge. Since Regal Foundation is body corporate, reverse charge not applicable, so therefore it will be forward charge. In case of service provided by way of sponsorship to any body corporate or partnership firm by other than body corporate is coming under RCM, since they are other than body corporate and the recipient Pandit Jewelers is body corporate, so it will come under RCM. So that is in case of this RCM with respect to renting of commercial property and sponsorship services. Keep this in mind. Apart from that, all other RCM will be normal. These two place only slight amendment is there. So we are moving on to the next amendment here, that is clarification in respect of input tax credit availed by e-commerce operator where services are notified under section 9(5) of the CGST Act. Basically here, whenever the services are supplied through e-commerce operator, that is under 9(5), the liability to pay GST is on e-commerce operator. What are those services? HATE, H for housekeeping services, A for accommodation services, T for transportation of passengers through any motor vehicle, E for eating food in a restaurant. As per 9(5), when e-commerce operator is liable to pay GST, how they will be paying GST? Through credit ledger or cash ledger, because they will have some input tax credit. What are the inward supplies of e-commerce operator? We have platform, so they have to buy the platform and they need to buy the server space and they need to receive the advertising services and technology development services. Lot of inward supplies will be there for e-commerce operators. So with respect to those inward supplies, they will have ITC, and can they utilize that ITC for payment of GST under 9(5)? Before this amendment, they can use input tax credit for payment of GST for HAT, housekeeping service, accommodation service and transportation service, but for eating food in restaurant, they cannot use ITC, they have to pay through electronic cash ledger only. That was the amendment before amendment. So before amendment, they can use both credit ledger and cash ledger, like that we had for few services, but for restaurant only, eating food through restaurant service only, they have to pay through cash ledger. But now CBIC gave a clarification that for all 4 services 9(5), all 4 services, 4 notified services supplied through e-commerce operator, the liability to pay GST is on e-commerce operator. They cannot use input tax credit, means they have to pay only using cash ledger. Then what they can do with respect to that input tax credit? They will have some other liability na. What is that some other liability? If they provide any other service through their platform or delivery charges, etc., on that they can pay GST and use the input tax credit. For example, you take Swiggy. Swiggy will supply food and will also do the Instamart. For supply of food, on food they need to pay GST, but on Instamart they will not pay GST on the goods. On goods, supplier will pay GST. They will pay GST only on the commission. So carefully listen. So what we are trying to understand is that Swiggy will make 2 different supplies. Swiggy will make 2 different supplies to the customers. So what is that? There is supplier A, who supplies the food, through Swiggy platform, okay, who supplies food through Swiggy platform to the customer, correct? Now in this case, for this food, who is liable to pay GST? Swiggy is liable to pay GST. So which means invoice is raised by, for this food, the invoice will be raised by, okay, who will raise the invoice for this food? Swiggy will raise the invoice. Swiggy will raise the invoice because GST is payable by Swiggy. Then there is supplier B. And supplier B will be making supply of some goods, Instamart, okay, Instamart, food, Instamart orders. So normal commodities and all they will be supplying to the customer. Now in this case, who will pay GST? Supplier only will pay GST, so they will raise invoice to the customer. Got it? Supplier only will pay GST, so they will raise invoice to the customer. Then what is the benefit to this? On this for Swiggy, they get commission. On that commission, Swiggy will pay GST. Is it clear? So what is the liability on Swiggy? They have 2 liabilities. GST on food, okay, plus GST on commission with respect to sale of goods. So whenever they are selling the goods through their platform, they get the commission, and on that they need to pay GST. Now listen. So this GST on food is covered under section 9(5), correct? This GST on food is covered under section 9(5) liability, but this will be normal liability. Now here, sir, can they use ITC for payment of GST on food? No. So this has to be paid. This GST on food is there na, that has to be paid only through cash ledger. So this 9(5) liability only through cash ledger, whereas this GST on commission normal liability is there na, that is through cash ledger or credit ledger. They can use both. They can use both credit ledger as well as cash ledger for making payment of this normal liability, but that 9(5) liability alone they have to pay using cash ledger. Credit ledger not possible, okay. So that's what is given here. E-commerce operators may pay tax under 9(5) for notified services, that is HAT, housekeeping service, accommodation service, transportation of passenger service and eating food from the restaurant, as if they are the supplier. Provide own services like platform access, commission, listing fee, etc., for which they charge users and pay tax under normal forward charge. The issue here is whether the e-commerce operator is required to reverse the proportionate ITC on inputs and input service used commonly for their own taxable services and section 9(5) supplies. No, they don't have to apportion. Whether ITC available to e-commerce operator be utilized for payment of GST under 9(5). These are the two issues for which they gave a clarification. Clarification number 1, no reversal is required. No reversal is required. That is, with respect to this GST on food, they are paying GST on food, whereas for commission only they pay not on sale of goods. Then how can they take entire credit? Nothing of that sort. They can take entire credit. They can take entire credit. All inward supplies they will be able to take ITC. No reversal of ITC is required under 17(1) or 17(2) just because e-commerce operator is paying tax under 9(5). However, the ITC cannot be utilized for payment of tax under 9(5). Then how that 9(5) tax should be paid? That tax must be paid only through cash. Earlier this condition was only for restaurant service through e-commerce operator, but now it is extended to all notified services through e-commerce operator. And the ITC whatever they have, they don't have to reverse. That can be utilized for payment of their own supplies, the commission, listing fee, etc. and all other things are there now on that. So for that they can use. The ITC can still be utilized for payment of GST liability on e-commerce operator own service. What if they are not able to utilize, they have excess credit? That excess credit will be carried forward. And there is no time limit now for utilization of credit. For availment only there is a time limit. But for utilization there is no time limit, so they can carry forward and adjust against the liability whenever they get the liability in future. At that time they can adjust with that. That is this clarification. And say this, e-commerce operator providing services, supplies notified under section 9(5), pay tax fully in cash, cannot use ITC. With respect to own services, that is platform fee, commission, etc., can use ITC to pay tax on such taxable supplies. No reversal of ITC required on inputs or input services used. Now, I have given one question based on this. Urban Stay Private Limited is an e-commerce operator facilitating short-term accommodation services through its platform, a notified service under 9(5) of CGST Act. In the month of April 2025, it had the following transactions. Outward supplies, if you see, booking charges for home stays provided by unregistered persons through the platform, platform usage fee charged to property owners, commission, advertising space sold on the website to brands. Okay, so these are the three things. Booking charges for home stays. So booking charges for home stays provided by unregistered persons through the platform. So in case of accommodation services, and housekeeping services, H&A, for H&A, remember H&A, housekeeping service and accommodation services will come under 9(5) only if the supplier is unregistered. So this is accommodation service, correct? Booking charges for home stays provided by unregistered persons through the platform, which means that liability to pay GST is on Urban Stay, not on the supplier. Because for H&A, housekeeping and accommodation, if the supplier is unregistered, the liability to pay GST is on e-commerce operator. Accordingly, e-commerce operator will pay. This is under 9(5). So this liability will be under 9(5). Platform usage fee charged to property owners. This is another transaction, separate transaction, commission. This is normal liability. And advertising space sold on website to brands, that is also their normal liability. Now, for this 10 lakhs into 12%, that is 10 lakhs into 12% is what? 1,20,000. They have to pay only through cash ledger, they cannot use ITC. But for this 2 lakh and 1 lakh, 3 lakhs into 18%, they can use ITC for payment. Now they have got some inward supplies, Google ads and marketing services, Can they take ITC? Yes. We don't have that in blocked credit and it is used in the course or furtherance of business. Therefore, ITC is available in this case. Office rent, commercial property also they can take ITC. Laptop purchase for marketing team also they can take ITC. But food and beverages is blocked credit. They cannot take ITC. Why? Food and beverages is blocked credit, but we have exception. What? Inward supply, outward supply in the same category? No. Inward, outward not in the same category because food and catering for in-house training. So no. And inward supply is part of outward supply. Then also it is not covered here. It is available, but it is not covered here. Statutory obligation not covered here. That's why ITC not available. Cloud server subscription, ITC can be taken. Okay. Next. So therefore, in this case, what happens is that they will be able to take the ITC. How much ITC they will be able to take? Say this: 1 lakh into 18%, 18,000. 70,000 into 18%, 12,600. 1 lakh 20 into 18%, 21,600. 20,000 into 5% they cannot take. That they cannot take. And 60,000 into 18%, 10,800. Total 63,000 they can take as ITC. Got it? Now, what is their normal liability? 3 lakhs into 18%. 3 lakhs into 18%, that is 54,000. So, 2 lakhs into 18, 1 lakh into 18, 3 lakhs into 18%, 54,000. Now, this 63,000 can be utilized for payment of 54,000. How much credit? 63,000. Fully they can utilize for 54,000. The remaining amount of credit, can they use for payment of this 1 lakh 20? No, that has to be paid by cash only. So, which means 63 minus 54, still 9,000 rupees is there. That 9,000 is the balance ITC to be carried forward. That balance ITC to be carried forward will be 9,000. And what about this remaining? I mean, like ITC carried forward, but 1 lakh 20 has to be paid. So, what is the total tax payable? 1 lakh 74, 1 lakh 20 plus 54, 1 lakh 74, but we can utilize only ITC 54. So, remaining 1 lakh 20 we have to pay only by cash because it is 9.5 liability. What is the balance ITC to be carried forward? 9,000. Okay. Again, in future, whenever they have liability, with that liability they can set off. That's how we need to arrive at the answer for this. Now, we are moving on to the next amendment, that is whether DDA, Delhi Development Authority, is local authority or not a local authority. What is the background? Generally, services provided by government to business entity is covered under RCM. What is the meaning of government? Central government, state government, local authority will be coming under government, and if they provide service to a business entity, it is covered under RCM. Delhi Development Authority provided some services to some business entities for which they collected some money, and a confusion came as to whether it is covered under RCM or not. But the Delhi Development Authority's argument is that first of all it is exempted. Where from RCM it is exempted? Because we are government authority. That is their argument. We are government authority and any service provided by government authority will be exempted. So, we will come under government authority, but GST department is saying no, you are local authority. Finally, a clarification has been provided. What is the difference between government authority and local authority? Government authority means a body or board or authority which is established under an act of parliament or state legislature, or a board or body in which government has invested greater than or equals to 90%. 2 points. Established under an act of parliament or state legislature, or in which the government has invested greater than or equals to 90%, and their purpose is to carry out the functions under the constitution, article 243G or 243W of the constitution. Then it is called as a government authority. Whereas local authority is completely different, which is under state government, which take care of the welfare of the people of that particular locality using the fund, municipal fund or panchayat fund, etc. That is called as a local authority. That is completely part and parcel of government. So, Delhi Development Authority is basically not a local authority, it is a development authority, urban development authority that will come under, government authority. It's not a local authority, okay, as the same is not an elected municipal body. Usually service provided by local authority to business entity is covered under RCM as per 9(3) Red with notification. As DDA, Delhi Development Authority, is not a local authority, their services will not come under RCM. However, they fall under governmental authority as they are set up under an act of parliament to carry out functions under the constitution. Article 243W, urban development will come under that. So generally we have an exemption that any service provided by government authority will be exempted. Any service provided by government authority is exempted, and consequently services provided by this Delhi Development Authority is also exempted. Now look into this question, how this can be tested in exam. Skyline Constructions Private Limited, a registered real estate developer in Delhi, enters into a lease agreement with Delhi Development Authority in April 2025 for acquiring a plot of land on long-term lease for commercial development. And Delhi Development Authority raised an invoice of 50 lakhs as upfront lease premium. But sir, we have an exemption, sir, upfront lease amount is exempted, like that one point is there. That is lease of land by SIDCO, State Government Industrial Development Corporation. But here Delhi Development Authority, anyhow government authority services will be exempted, let it be upfront premium or whatever it may be. Skyline Constructions intended not to pay GST under RCM, claiming that since DDA is a local authority and the services fall under serial number 5 and hence RCM applies. So basically they enter into lease agreement for acquiring a plot of land. However, the jurisdictional officer contends that DDA is not a local authority under section 269 and demands GST payment under forward charge by DDA. So basically, they enter into a lease agreement with Delhi Development Corporation for acquiring a plot of land. So basically Delhi Development Corporation is the supplier which is giving the plot of land to Skyline Constructions. Okay. So, but the officer is telling it will come under forward charge, Delhi Development Authority has to pay GST. Justify your answer with the legal provision. Basically, Delhi Development Authority is not a local authority, that is correct. Whatever the jurisdictional officer is contending is correct, but GST payment will not arise. Okay. It does not qualify as local authority. Therefore, RCM, which applies only to service provided by local authority to business entity, not applicable in this case. However, DDA qualify as government authority since it is a statutory body under Delhi Development Act and it is eligible for exemption. Therefore, there is no GST liability either under reverse charge or under forward charge. The officer's contention is not correct. The officer is telling that it is forward charge, that is also not correct. Reverse charge also not correct because there is no GST payable. The contention of jurisdictional officer is not correct. So this is related to that question, Delhi Development Authority point, how they can test in exam. I gave all the questions on amendments in order to understand its application. Okay, but you remember the amendment, that is sufficient. So don't see this many pages are there, this much time is there, etc. and all. Finally, what you need to remember is only the amendment, what it is. Now we are moving on to exemptions under GST. In this exemptions under GST, there is one section, that is section 11A of CGST Act. Whatever is there in 11, the common section for IGST Act is section 6. Section 6A of IGST Act, 11A of CGST Act. That is power not to levy GST as a past general practice. I will give you little background related to this. Say suddenly government is bringing a particular transaction into the taxability. In the past, from 2017, people have not paid GST on the transaction. Now suddenly when GST department, that when government brings in the taxability of this transaction, people will not accept to this. Can the people protest, and whether the government has power to roll back or should it take parliament approval? To bring a point into the taxability, they need parliament approval because they need to present it in the Finance Act and they need a parliament approval, and then the amendment will come into place. But when to roll back, to remove it, then logically we need to take parliament approval, but for that reason they are telling again no need to wait for the parliament approval. The government can by way of notification itself do so. Example, on jewelry, the rate of GST is 3%. So, because gold rate is 3%, so on jewelry also it will be 3%. But now, say, if Finance Act 2025, they may come out with one amendment stating that only on the metal involved in the jewelry only it will be 3%, but on the making charges 18% is payable. Because in jewelry there are two parts, one is metal value, another is making charges. Then on making charges GST will be 18%, on metal it will be 3%, like that. One change has been brought, for example. But so far people were not accustomed to paying it, people were paying only 3%. Now can the people make a protest? Yes, jewelry shops and people, everyone can make a protest. Because of which, whether again next Finance Act 2026 only they will take the decision to remove it, or immediately whether the government has power to remove, immediately the government has power to remove. No need to wait for the parliament, through notification they can tell whatever amendment we have brought in through Finance Act 2025 stands omitted. Like that they can bring. That is known as power not to levy tax or power to reduce the tax whenever it is as a past general practice. Sages. Power not to recover goods and services tax not levied or short levied as a result of general practice. Notwithstanding anything contained in this act, means this section will override. If government is satisfied that a practice was or is generally prevalent regarding levy of central tax, okay, for example, gold jewelry 3%, on any supply of goods or service or both, and such supplies were or are liable to central tax in case where according to the said practice central tax was not or is not being levied, or a higher amount of central tax, in this case a higher amount of central tax is being levied, a higher amount of central tax is being levied in accordance with the said practice, the government may, on recommendations of the council by notification official gazette, by notification in official gazette, okay, by notification in the official gazette, direct that the whole of the central tax payable on such supplies but for the said practice shall not be required to be paid, in respect of the supplies on which central tax was not paid or is not being levied or was or is being short levied in accordance with the said practice. As per the past practice, on jewelry 3% only, now they increased on making charges 18%. So whether the government has power not to levy the taxes? Yes, by notification official gazette shall make a notification for what? So shall not be required to be paid, tax shall not be required to be paid in respect of the supplies on which the central tax was short levied. So no need to pay that. That's what rollback provision. You can remember it like rollback provision. Okay, and same way, in the past there was no tax on a particular transaction. Suddenly they have brought it into the taxability. Whether government is having power to roll it back? Yes. Previously no tax was levied, not levied. Now they are starting levying. Can they roll back? Yes, they can roll back. For example, few years ago, restaurant services were charging a service charge as a part of their bill, but they were not applying GST to it because of a common industry practice. The CBIC later clarified that GST should be levied on the entire bill including the service charges. Using this provision, the government could issue a notification that as a general practice, as restaurants are not charging GST on service charges, so the GST on such service charges may be exempted, like that. That's what rollback provision. That power is there. Previously that power was not there, which means they need to wait again for the GST council meeting and parliament approval. But now in this case the government can suo motu on its own based on the people's request in general practice. So public at large should be affected, then in that case they will be coming out with this notification. Next, then we have 9th point, services provided by training partner approved by NSDC or NCVET is exempted. So this point here, what happened is that previously this NSDC, National Skill Development Corporation, they used to have three bodies: awarding body, assessment body and training body, like the three bodies. what awarding body will do, will give the certification, and what assessing body will do, will conduct the test examination. So conducting the question, creating the question paper, conducting the test. And what this training body will do, training body will create the curriculum, what is the course, what should be taught, etc. and all, the training body will create. Okay va? So 3 bodies under National Skill Development Corporation and NCVET, National Council for Vocational Education and Training. Okay. So these are the 2 premier institutions for skill development in India. Below this, there used to be 3 bodies. First, a training body. What it will do? It will not conduct the training. It will create the curriculum. What course curriculum it will design. And next, assessment body. Based on this curriculum, assessment body will create a question paper and do the testing. And finally, awarding body will give the certification to the candidates. Now, training partners. So who are training partners? That curriculum need to be taught to the students, teachers. So our institutions, coaching centers, the training partners previously, whether exempted or not, was a confusion. And finally, there was a big debate. So no, training bodies only exempted, training partners are not exempted, which means these coaching centers are required to pay GST, etc. and all. Finally, they have brought in this circular wherein they are telling, this point they are telling that even training partner is also covered under the exemption, they added. So National Skill Development Corporation set up by Government of India, National Council for Vocational Education and Training, awarding body recognized by NCVET, assessment agency, that's what, awarding body, assessment agency, training body. Now they added training partner, approved by NSDC in relation to National Skill Development Program or any other scheme implemented by the National Skill Development Corporation. So training partner also they have added, but that training partner should be approved training partner. Just like that, one coaching center is doing skill courses does not mean that it is exempted. So they should be approved by NSDC. Now look into this question related to this. Skill Bridge Private Limited, a GST registered training organization based in Hyderabad, enters into the following arrangements in January 2025. It signs a MOU with National Skill Development Corporation to act as an approved training partner. It's an approved training partner under Pradhana Mantri Kushal Vikas Yojana, a scheme implemented by NSDC. It conducts training on retail sales associate skills aligned to NSQF level 4, that is called as a curriculum. Okay, like they will be giving level 1, level 2 like that, and receives 50 lakhs from NSDC for this purpose. However, they are not a training body accredited by NSDC. Okay, even if they are not a training body, but the money received by them is exempted because they are approved training partner. So the first point will be exempted. Second, it provides soft skills and spoken English training independently to college students, charging 6,000 per student without any NSDC affiliation or recognition from NCVET. The program is not aligned with NSQF. NSQF is National Skill Qualification. Okay, so not aligned to that, which means it is not covered under the list. So therefore it is taxable. So this 6,000 rupees per student will be taxable. They are neither approved awarding body or assessment agency or a training body or a training partner. Then number 3, it provides service as an awarding body. Awarding body, no doubt it will be exempted. Awarding body recognized by NCVT by way of designing the curriculum for training in mobile handset repair. The training program is part of a qualification package approved by NCVT and aligned to NSQF level 3. The program is funded by State Government Skill Mission. It is covered under exempted because they are covered under awarding body, approved awarding body. See, that's what, 4 people you remember: assessment agency or assessment body, awarding body, training body or a training partner. Okay. Then next one, exemption with respect to services provided by Motor Vehicle Accident Fund. What is this Motor Vehicle Accident Fund? Listen carefully. Now you purchased a 2-wheeler or 4-wheeler, and whenever you purchase a 2-wheeler, 4-wheeler, you need to take the insurance. In that insurance, there is a point called as third party insurance. What is third party insurance? You drove your vehicle and any accident happened. If there is any loss to your vehicle, normal insurance will cover. Insurance will cover. this comprehensive insurance or bumper to bumper insurance, etc., that will cover. So the garage will provide the repair and the insurance company will make the payment to garage. That's okay. But you hit the other person, na? What about the loss suffered by the other person? Then in that case, there is some amount which you pay as a part of your insurance premium called as third party insurance premium. In the total insurance premium, one part will be for third party, that is for the other person. This third party insurance, whatever premium is collected from the motor vehicle owners, will be contributed to the motor vehicle insurance fund, which is maintained by government under Motor Vehicles Act. Now, the other person who suffered the loss because of you will be paid money out of that motor vehicle insurance fund by the government. Example, one lorry hit the car. Now, in this case, on that lorry, the third party insurance will be taken, or normally one person is going on road, you hit the person is injured or dead, etc., from where the compensation will be paid out of the motor vehicle insurance fund. How money will come into motor vehicle insurance fund? We pay the third party insurance to the insurance companies, na, out of that it will be contributed. That's why traffic police, every time when he catches you, he will check whether third party insurance is there or not. Your vehicle, whether you take insurance or not, it's okay, but the third party insurance you should have taken, it is mandatory. That is why traffic police will definitely check for the third party insurance, and that's why many people will be telling, at least if you are not renewing insurance, it's okay, but the third party insurance alone you renew and keep like that, they will tell. This is the main reason why they will do that. Now, this motor vehicle insurance fund is like a group insurance fund from whom they will be collecting, all the insurance companies they will be collecting. Generally, some group insurance funds are exempted. What are they? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. Along with that, motor vehicle insurance fund is also exempted. Okay, say this. Service of insurance provided by motor vehicle accident fund, constituted under section motor vehicle accident fund. It's like a group insurance, okay, under section 164B of Motor Vehicle Act, against contribution made by the insurers, okay, out of the premiums collected for third party insurance of motor vehicles. Out of the premium, third party insurance premium, the insurers, insurance companies will pay this. So see the explanation relating to this. The Motor Vehicle Accident Fund is constituted under section 164B of Motor Vehicle Act 1988. It is a statutory fund. The fund is used to provide compensation or medical treatment to victims of motor vehicle accidents, hit and run cases, unidentified vehicles, etc. How it will be funded? Funded through contributions made by the insurance companies. These contributions, how the insurance companies are making out of the premium collected on third party motor vehicle insurance. Whether the third party motor vehicle insurance premium collected by insurance companies is exempted? No, that is taxable. That is, insurance company will collect the third party insurance premium, that is taxable. But thereafter they contribute it to the motor vehicle accident fund, na, that contribution they made and collected by government is exempted. Therefore, the contributions collected under this fund is exempted. Now see this question. Sure Life Insurance Limited, a registered general insurance company, collects premium from policyholder for third party motor vehicle insurance. As per the Motor Vehicle Act 1988, the company is mandated to contribute a portion of such premium collected to the Motor Vehicle Accident Fund, constituted under section 164B of the Act. The fund is used to provide insurance or compensation to victims of hit and run motor accidents and to meet certain emergency medical expenses. During financial year 25-26, Sure Life collected 100 crores in third party insurance premium, contributed 4 crores to the motor vehicle accident fund as per the statutory obligation. Okay, how much they collected? 100 crores in third party and 4 crores to motor vehicle accident fund as per statutory obligation. Sure Life is uncertain whether GST needs to be paid on the service of insurance provided by the fund against such contributions. Whether third party insurance premium collected is chargeable to GST? Yes, the third party insurance premium collected is taxable. This 100 crores will be taxable. But analyze whether the service of insurance provided by motor vehicle accident fund are subject to GST, that is exempted. If the fund later makes payment to victims or their families, would such payout be treated as taxable consideration? No, because it is compensatory in nature. Do you remember the circular on liquidated damages? If any money is received for the compensatory nature or penalizing a person to discourage an act, that will not be treated as consideration. So this compensation, whatever is received by the injured, will be coming under compensatory in nature. Liquidated damages which are compensatory in nature are not treated as consideration. Okay. So A, yes, third party motor vehicle insurance premium collected by insurers is taxable under GST, no doubt. Then contributions made by insurers like Sure Life to fund are not subject to GST as they are statutorily required to be paid, which is covered under the exemption. The payouts made by the fund to accident victims or their legal heirs are not treated as consideration. Why it is not treated as consideration? Because it will come under liquidated damages which are compensatory in nature and hence do not attract GST. So this is what you need to keep in mind. Okay. Then next, so like that they can connect that circular on liquidated damages to this point. Okay, see nowadays questions and all are like this, wherein from one aspect only you cannot see, even the other points also can be connected here. Now we are moving on to the next one, applicability of GST on facility management services provided to Municipal Corporation of Delhi. Municipal Corporation of Delhi, is it government? Yes, Municipal Corporation of Delhi is government. And we have one point, any service provided to government in relation to an activity under 243G or 243W of the Constitution is exempted. Okay. So there is a government which is required to do certain activities as per 243G or 243W of the Constitution, who government is required to do as per 243G or 243W of the Constitution to the general public or to business entities. They outsource it to you. They outsource it to you and you are providing that services to government. If it is a pure service, it is exempted. This is one exemption. One more point is there. If it is a composite supply of goods or services, both goods and service will be there. First example, you can take this solid waste management. Solid waste management means cleaning the garbage, etc. That's a pure service which the government has to do as per 243G or W, but which they outsourced it to you and you are providing that services to them. That is fully exempted. That is one point. Another point is there. What is that another point? Composite supply of goods or services where the value of goods does not exceed 25% of the total, that is also exempted. Example, laying down cement road, whose work? Government work, but they outsource it to contractor. The contractor is laying down the cement road. The value of the goods does not exceed 25% or exceeds 25% of the total, exceeds 25% of the total, so it is taxable. What if the value of goods does not exceed 25%? For example, sanitation, like filling the drainage with pesticides, etc. and all. In that case, definitely the value of goods does not exceed 25% of the total. Am I right? Then it is exempted. This is the exemption which we already have. But now the point is, this Municipal Corporation of Delhi government is receiving facility management services. Facility management services means what? Some housekeeping services, some cleaning services, etc. for their office building. Okay. Will it come under pure service or composite supply where the value of goods does not exceed 25% and it is exempted? No. Why? Carefully listen. First of all, this activity should be the activity or obligation of the government as per Constitution. First, this activity what they are receiving, whatever service they receive, that should be their obligation to provide to the general public. That should be their obligation to provide to the general public as per Constitution. For which if they outsource, then it will be coming under the exemption. But first of all, this facility management services which they are receiving is not their obligation to do it to the general public. So in that case, whenever they receive the services, we cannot take ITC. A similar point like this, even we have in, previously related to army. Indian Army receives sanitation services, whether it is exempted. Same point we have read, wherein it is not the work of the Indian Army to provide the sanitation to general public. So if they receive the sanitation services, they will not be able to claim the exemption with respect to that. Okay, same way, say this. Entry number 3A provides exemption to composite supply of goods and services in which the value of supply of goods constitute not more than 25% of the value of said composite supply provided to government or local authority. So, pure service is exempted or composite supply of goods and service exempted where the value of goods does not exceed 25% of the total. Okay, supply provided to government in relation to an activity entrusted to them under Article 243G or 243W of the Constitution. The service of facility management such as housekeeping, civil maintenance, furniture maintenance and horticulture agency for the upkeep of office of this Municipal Corporation of Delhi are not supplied in relation to performing any functions entrusted to municipality. First of all, is it their work to do for general public? No. Such services are not covered under the scope of entry 3A. Thus, it has been clarified that GST is applicable on services provided by Facility Management Agency to MCD Delhi for upkeep of its headquarters. So, first it should be the activity of that government to do it to general public, and when they outsource it, then only that outsourced activity is exempted. Okay. Now, say this, question number 3. Examine whether GST is exempted in the following independent cases of supply of services. Apex Facilities provided civil maintenance service for the upkeep of Municipal Corporation of Delhi head office building. Value of supply of goods constitute 20%. Even though the value of supply of goods does not exceed 25% of the total, first of all, it is not the work of the Municipal Corporation of Delhi to provide it to the general public. Due to that reason, exemption is not applicable and it will be taxable, not exempt and it will be taxable. So, it is an RTP question. Messrs. Talreja and Talreja, a firm of advocate, provide legal services to state government for representation in High Court. Exempted. Services provided by individual advocate or firm of advocate or arbitrator to central government, state government, local authority, government authority or government entity is exempted. Next. So, therefore, second point, it is covered under the exemption. Next, BLF Mall, Noida provides services by way of vehicle parking to general public in the basement of the mall. So, whatever parking, renting of which property? Commercial property, definitely it will be taxable, no exemption and all here. So, it is not specifically exempted, therefore chargeable to GST. Services provided by a private transport operator to Scholar Boys Higher Secondary School by way of transportation of students to and from the school. So, transportation to educational institution, this is to educational institution. Which educational institution? Category 1 educational institution. Therefore, transportation of students, faculty and staff to this institution will be exempted. So, services provided by them will be covered under the exemption. Now, we are moving on to the next exemption, that is exemption with respect to card transactions, card. So, credit card, debit card, charge card or any other payment card service up to 2000 rupees in a transaction. So, this exemption was already there. So, in banking services we had this exemption. If there is any processing fee for card transactions, that is card, any card, debit card, credit card, charge card or any other card transaction, there will be some processing fees. The acquiring bank will be collecting some processing fees and that processing fees will be exempted from GST if the transaction, card transaction is up to 2000 rupees. Okay. So, that is you are making a swipe amount and the swipe amount does not exceed 2000 rupees, there will be some processing fees which is collected by the acquiring bank who will make a debit from your account and credit to the vendor account. So, on that processing fees the GST will be exempted. Now, what is the issue here? The issue is with respect to online transactions. You can use your card and make the payments through online also. So, there are a lot of payment gateways, so like Razor Pay, Phone Pay, PayU, etc. So, even Citrus Pay, etc. A lot of people are there in this, and whenever they do the payment, like you make the payment through card rather than going to the shop using your debit card in the POS device, that is point of sale device, rather than doing that, what you do is that you make the online payments using the card. Then how it works? Even then the processing fees will be there, yes, even then the processing fee will be there. So, these payment aggregators called as Paytm, Razorpay, etc., what they do is that they collect the money from you, and that is from your bank, and they will keep it in escrow account, and thereafter they will settle it to the vendor. For doing this, they get a processing fees. That processing fees is also exempted. Will they come under acquiring bank? Yes, they will also come under acquiring bank, even though they are not called as bank, but they will come under the meaning of acquiring bank. How? Let's try to understand. So entry number 34, what does entry number 34 deals with? Entry number 34 exempts service by an acquiring bank related to settlement of a card transactions up to 2000 rupees in a single transaction. What is the meaning of acquiring bank? Acquiring bank means banking companies, financial institutions, or any person making payment to card accepting merchants. So this any person making payment to card accepting merchants, under that any person we have payment aggregators. So payment aggregators regulated by RBI, yes, they are regulated by RBI, collects payment from customers and transfers funds to the merchants. Hence they handle money and they will come under acquiring bank. Therefore RBI regulated payment aggregators are eligible for this exemption. Of course, transaction should be up to 2000 rupees. And what about payment gateway charges? This is the payment settlement services, payment settlement charges. But payment gateway charge is there. What is payment gateway charge? They are facilitating you one browser, web page, you can enter your details, make the payment, etc. and all. Now that is called as gateway charges. For payment gateway charges, we don't have any exemption. That will be taxable. Payment gateways who merely provide technology infrastructure without handling funds are not eligible for this exemption, that will be taxable. So we will divide it into two. Amount collected by payment aggregator for online transactions, that is RBI approved payment aggregators. If it is settlement charges, that is processing charges, if the transaction is up to 2000 rupees, one transaction is up to 2000 rupees, then the processing charges will be exempted, everyone. Whereas if it is exceeding 2000 rupees per transaction, entirely it will be taxable. What about gateway charges? Gateway charges will always be taxable, whatever may be the case. Now let's see the next amendment that we have in time of supply. In time of supply, so we have vouchers related one clarification, but already we know this clarification. Is voucher goods or services? We already know that voucher is neither goods nor services. Why is it so? Generally what happens in case of voucher is that, so whenever you are getting the voucher, which means that you can redeem that voucher towards purchase of any product or service, correct? You can redeem that voucher against purchase of any product or service, which means a voucher will be treated as consideration. So there are vouchers which are divided into two: approved by RBI, not approved by RBI. Prepaid instruments, PPIs. Prepaid instruments, PPI, like that it is there. For example, Amazon gift voucher, Flipkart gift voucher and all you can buy. Even some shops are there, lifestyle, then Shopper Stop, or jewelry shops. In that places and all, you can buy the voucher, you can buy the gift voucher. That will be called as prepaid instrument, which is recognized by RBI, which is approved by RBI, which means they will be coming under money category. If it is money, then it is neither goods nor services. Okay, so look into that particular point here, where you can see. So GST treatment of vouchers. What is the GST treatment of voucher? First, there is a definition for voucher. A voucher is an instrument that can be used as a consideration or part consideration for a future supply of goods or services. So it can be treated as consideration or part consideration against supply of goods or services. Basically in these vouchers there are some prepaid instruments like wallets, cards, etc., which are regulated by RBI, or subset of vouchers. Example, Flipkart gift voucher, Flipkart gift voucher, Flipkart gift voucher, and then so this Joy Lucas or any jewelry shop. Okay, so Joy Lucas Joy Lucas gift voucher. These are all examples of prepaid instruments, and whether voucher is supply. If the voucher is a prepaid instrument recognized by RBI, it comes under money definition. Money is, because any instrument recognized by RBI will come under money. Money is neither goods nor services. Since money is excluded from the goods or services, so voucher is neither supply of goods nor supply of services, consequently there is no GST. Sir, what about normal vouchers, promotional vouchers which are given by the shops? Like if you buy for 2000 rupees, you will get a 500 rupees worth voucher from Reliance Trends. That is prepaid voucher or not a prepaid voucher? Not a prepaid voucher, because you are not making any payment for it. It is a pure gift voucher. In order to promote the sales, you are getting that. So if the voucher is not recognized as a prepaid voucher, just remember Reliance Trends or Zudio or this West Side, etc. These vouchers not treated as money. Such voucher is an actionable claim. Okay, why? Because number one, you have a Reliance Trends voucher of 500 rupees. Do you have right to receive the benefit? Yes. Is it legally enforceable? Yes. Tomorrow if they say no, we will not give any discount like that, no, they have to, legally enforceable. Number 3, can be transferred. Yes, the voucher can be transferred to any person. Number 4, the holder of that voucher is entitled to receive the benefit. Correct. All the 4 conditions for actionable claim is satisfied. Therefore, other than prepaid vouchers will come under actionable claim. Not treated as money, but that voucher is treated as actionable claim. But is it covered under specified actionable claim? No, it is not covered under specified actionable claim. But it is other than specified actionable claim. What are the specified actionable claim? HC block is only specified actionable claim. So it is other than specified actionable claim, which is not covered under supply, excluded from supply. Why? Because in exclusion from supply, 7 subsection 2 read with schedule 3. So we have actionable claims other than specified actionable claims is excluded from supply. Accordingly, it is also neither supply of goods nor supply of service, and there is no GST. What is the conclusion we can draw? Whenever we are giving voucher, it may be a prepaid instrument or not, that voucher is not a supply and will not be chargeable to any GST. Voucher per se voucher is not a supply, but that voucher will be redeemed against supply of goods or services, that will become supply. Okay, this voucher, when you redeem some product or service is being supplied now, that is called as supply. Next, when transaction in vouchers is chargeable to GST, if it is a principal to principal basis. What does that principal to principal basis means? That is, there is a shopkeeper, for example, Shopper's Stop wanted to promote its business. For that reason, they will be appointing some marketing agencies. What these marketing agencies will do? They will be, marketing these vouchers to the corporates. Now, corporates wanted to give gifts to their employees. Rather than giving money or anything as gift, so they will be giving Shopper's Stop voucher as a gift to their employees. Who? Corporates. Now, 3 parties are involved. Shopkeeper, that is Shopper's Stop, okay, and then marketing agency and the company which buys the voucher through this marketing agency and give it to their employees. Got it? Now, if this particular marketing agency buy the voucher from Shopper's Stop and sell the voucher to companies, say for example 500 rupee voucher they will buy at 400 and sell at 500 rupees to the corporate, then it is on a principal to principal basis, wherein purely it is purchase and sale, so there is no GST at all. Okay, again I am repeating. So what Shopper's Stop is doing? First, Shopper's Stop is a store and there is a marketing agency, okay. So marketing person, this marketing person is distributing it to companies, is distributing it to corporates. Now Shopper's Stop will make sale at sale of voucher paide. This is sale of voucher, sale of voucher at rupees 400. And what marketing person will do? Will make sale of voucher will make sale of voucher at 500 rupees. Now in this case, the shopper stop and the marketing person is acting on principal to principal basis, P2P, principal to principal basis. So this 400 rupees is not a supply. Even the marketing person selling this voucher for 500 rupees is also not a supply. Okay, so it is not a supply. Where is it given? See that. Distributor buys vouchers. Distributor buys vouchers at discount and sells at a markup. Owns vouchers, operates independently. No GST on voucher sale. It's just a trading in money and action or actionable claim. So there is no GST on that. Suppose if there is a slight change, okay, instead of doing it like this, there can be a principal to agency model. Okay, what is that principal to agency model? So say this marketing person will not buy the voucher, directly shopper stop only will make the sale of voucher to the companies. Okay, shopper stop will make sale of voucher to companies, sale of voucher, and as this is facilitated by this marketing person, shopper stop gives a commission. Shopper stop gives a commission to this marketing person. Now in this case, what will happen? Now the shopper stop and marketing person is working on P to A basis, principal to agent basis. This commission will be chargeable to GST. This is supply under 71A, supply under 71A and GST payable on this commission. But this sale of voucher is not a supply. This sale of voucher will not be coming under supply. So say this, distributor acts as a agent of voucher, gets commission or fee for marketing or distribution. GST is payable on such commission or service fee. That is about this. So apart from this, any other services like marketing, advertisement, tech support, co-branding, customization, all these are independent services not connected to the voucher. I mean, like not sale of voucher, that will be subject to GST. Then one important point, what if the voucher expires? If the voucher expires, why the voucher will expire? Because every voucher will have a validity. If the voucher expires, what will happen? So there won't be any GST liability. Only when the voucher is redeemed against supply of goods or services, there will be GST liability. If the voucher expires, there won't be any GST liability. But before that, I wanted to connect with time of supply provisions. In time of supply provision, section 12 subsection 4 and 13 subsection 4 of CGST Act, what does it says? The time of supply in case of vouchers, identifiable voucher is at the time of issuance of voucher. Non-identifiable voucher is at the time of redemption of voucher. What is identifiable voucher? If there is a product or service which is mentioned on the voucher, it is identifiable voucher and it can be redeemed against a particular product or particular service. But non-identifiable voucher can be redeemed against any product or any service, that is non-identifiable voucher. For example, so voucher that can be redeemed against purchase of only a handbag, identifiable voucher. Rupees 500 Domino's voucher, you can redeem it for purchase of anything in Domino's, that is non-identifiable voucher. Now identifiable voucher, what is the time of supply? At the time of issuance of voucher. But there is no supply na sir, let it be. Voucher is not a supply. But at the time of issuance of voucher, identifiable voucher, we need to consider that the product has been sold. For example, we are giving a voucher for a handbag. Now, whether the person is redeeming it or not, today itself we need to consider that the handbag has been sold and we need to pay GST. What if that person is not coming and redeeming the voucher? Then, in that case, unnecessarily we paid the GST, we need to get the refund of the GST paid. Second, what if it is non-identifiable voucher? Non-identifiable voucher, always the time of supply is at the time of redemption. What if he is not coming and redeeming? There is no liability at all. Okay, that is the meaning here. If the voucher expires unused, the retained amount by the issuer, so maybe some amount they would have collected na, prepaid instrument means some amount they would have collected, is called breakage. Since no underlying supply of goods or service occurs, no GST is applicable on breakage, which means any GST liability is there or GST liability is not there. GST liability is not there, GST is not at all payable. Is it clear? GST not payable. What if they have already paid GST? They will get the refund of the GST paid. Now look into this question. Gift Cart India Private Limited is an Indian startup that issues prepaid gift cards and vouchers redeemable at multiple retail outlets and e-commerce platforms. These vouchers are issued both as RBI recognized prepaid instruments, reloadable digital wallets, and closed loop gift cards not recognized by RBI. Gift card enters into two types of arrangements for distribution with Happy Distributors Private Limited on principal to principal basis, where HDPL purchases 10 lakh worth of vouchers at a 10% discount and sell them to corporate at face value. There is no GST on that. With ClickPay Solutions LLP as an agent, where ClickPay distributes vouchers via online platforms and earns a commission of 1.5 lakh per month. ClickPay also charges 50,000 rupees per month for tech support and marketing services related to voucher issuance. Okay. Now, during financial year 24-25, Gift Cart reports 3 lakh worth of vouchers that expired and unredeemed. It has issued both RBI regulated PPIs and closed loop gift cards under these models. Examine whether GST is applicable and compute GST liability, if any, on the above transactions if such vouchers are recognized as RBI regulated prepaid instruments or not recognized as RBI. Suppose, first case, sale of vouchers to HDPL, how much? 10 lakhs at a discount of 10%. So there is no GST because these vouchers, if recognized by RBI, is money, if not recognized by RBI, then it is actionable claim. So there is no GST on this. So no GST is applicable because either it will come under money or it will come under actionable claim, and there won't be any supply, consequently GST not payable. Second, what about this commission? Commission 1.5 lakh per month. ClickPay as an agent, where ClickPay distributes vouchers via online platforms. What about this 1,50,000? ClickPay acts as agent, earning a commission of 1.5 lakhs and service fee of 50,000, and both will be taxable. Therefore, GST liability will be 1.5 lakh plus 50,000, 36,000 will be the GST liability on ClickPay. What about the unredeemed vouchers of 3 lakhs? So 3 lakh worth of vouchers expired is not liable to any GST, since there is no underlying supply, and consequently, even though we have received some money, but that will not be chargeable to any GST. No GST on breakage. There is no express or implied agreement to forfeit or charge for non-redemption. So due to that reason, GST liability shall not arise. So as this September exam, there is an important clarification related to vouchers. There is a high chance that this point can be tested. Maybe they can coin a question like this. Okay, they can coin a question like this for your exam. This is related to the vouchers that you need to remember. Now we are moving on to the next amendment, that is time of supply in case of services covered under RCM. So what will be taken as time of supply in case of service under RCM? There are few points here, notable points you need to understand. Generally in case of RCM, who will be giving invoice to whom? Supplier will be giving invoice to recipient, or recipient will be giving invoice to supplier. Generally, if the supplier is registered, supplier only will give invoice. See, I am discussing this in the context of RCM, keep in mind, okay. So this is in the context of RCM. In the context of RCM, I am making the discussion, okay. In the context of RCM, if supplier is registered, of course recipient is also registered. So who will be giving invoice to whom? Definitely supplier only will be giving invoice to the recipient. Invoice is given by supplier to recipient, no doubt. Then suppose if the supplier is unregistered, if the supplier is unregistered and the recipient is registered, then who will be giving invoice to whom? Sir, recipient will be giving invoice to supplier. Recipient will be giving invoice to supplier. This is called as self invoice, but this is only in the context of RCM. So when supplier is registered, recipient is registered, if the supply is covered under RCM, supplier only will give invoice to the recipient. But when supplier is unregistered, the recipient is registered, the recipient will be giving self invoice to the supplier. Okay. What is the time limit for this self invoice? 30 days from the date of receipt of goods or services. Within 30 days from the date of receipt of goods or services. So whenever the recipient has received the goods or services, from the date within 30 days, the invoice, self invoice needs to be issued. Okay. Now, what is this we are discussing now? What is the time of supply as per services under RCM? So this is the provision what we have, updated provision. In case of supplies in respect of which tax is paid or liable to be paid on reverse charge basis, the time of supply shall be earlier of the following dates. This is service under RCM, section 13 subsection 3 pa. Section 13 of CGST Act deals with time of supply in case of service. In that subsection 3 is RCM. What they are telling, the date on which payment is entered in the books of accounts or the date on which payment is debited in bank account, whichever is earlier. Usually when the service is covered under RCM, from whose point of view you will determine the time of supply? From recipient point of view. So recipient point of view we need to check the date on which recipient is making payment to supplier, that is this A. B, the date immediately following 60 days from the date of issuance of invoice or any other document by whatever name called in lieu thereof by the supplier, in case where the invoice is required to be issued by supplier. Okay. Or the date of issue of invoice by the recipient in case where the invoice is required to be issued by recipient. So now we have two time of supply provisions. So we have two time of supply provisions. So that we are trying to understand what are those two time of supply provisions. Time of supply in case of what? Services under RCM where invoice by supplier to recipient. Got it? Time of supply in case of services under RCM where invoice is given by supplier to recipient. This is one version. This is one. So in exam, please check this. Please check who is giving invoice to whom. Time of supply in case of services under RCM where invoice by recipient to supplier. Are you getting this? Self invoice pass self invoice. Time of supply in case of services under RCM where invoice is given by recipient to supplier. What will be taken as the time of supply in this case? Suppose if supplier is giving invoice, A is common in both the places. A is common. Date of payment to supplier. Date of payment to supplier. Here also same here. Date of payment to supplier. Same, both the places. Then what? Then in this case, 61st day from the date of invoice. See, the day following 60 days. The day following 60 days is what? 61st day from date of invoice by supplier. Whereas here it is not 61st day. Date of invoice by recipient. Simple. Date of invoice by recipient. Due data, actual data. Actual date by which recipient is giving invoice to the supplier. Date of invoice by recipient. Whichever is earlier. Whichever is earlier, that is same, will be taken. Okay. So what we need to see is that first we need to check the date on which payment is made to supplier, 61st day from the date of invoice by supplier, whichever is earlier. This was a provision which was there even before also. Before also this provision was there. but now they added this because of the self invoice. Date of payment to supplier or date of invoice by recipient. See there. Date of payment common pa. This point, B point will not come. C point, the date of issuance of invoice by recipient in case where the invoice is to be issued by recipient. Okay. Then the proposed amendment to 1331 3F deal with the provisions for determining the time of supply for issuance of self invoice in case RCM is applicable. These are the changes. First, what should be taken as the time of supply under RCM? So the time of supply will be the date on which payment is made or the date of issuance of invoice by recipient, whichever is earlier, because this A point is also there, C point is also there, whichever is earlier of the following dates. That's why. And what is the time limit for self invoice? When self invoice is applicable, whenever the supplier is unregistered, the recipient is registered, then the recipient has to give the self invoice to the supplier in case of RCM, that is this. And time limit for issuance of self invoice 30 days from the date of receipt of goods or services. And there is one explanation that has been added. Generally, in case of TDS deductors, who are TDS deductors? Government departments, etc. or TDS deductor na, central government, state government department, local authority, public sector undertaking, etc. is there na. So TDS deductors, if they are registered for deducting TDS, and if at all you are making purchase from them where you are required to pay GST under RCM, of course services provided by government to business entity is covered under RCM, and the government department is registered only for the purpose of deducting TDS. They don't have a normal registration. Now, how we need to treat the supplier as unregistered person, and the recipient should give invoice to the supplier. A very important point, crucial point. Say this. Pa, there is a government department. Government department. So this government department is making some supply of services to whom? To a business entity. And that business entity is registered. Okay. Will it come under RCM? Of course, yes. It will be taxable under RCM. Now, whether the government department is registered or not registered, the government department is registered only as TDS deductor. TDS deductor under GST. Under GST, they are registered only as TDS deductor. Now, who will be giving invoice to whom? For the purpose of invoice, treat this government department as unregistered person, because they are registered only for deducting TDS, which means they should be treated as unregistered person. So the business entity which is registered should give self invoice. That is the explanation they have added. So read this. The amendment also introduces an explanation stating that a supplier who is registered only for deducting TDS will be considered as an unregistered person for the purpose of reverse charge. This means that if the recipient receives supplies from such a TDS deductor supplier, they will be required to issue a self invoice as though the supplier were unregistered. Okay, as if the supplier is unregistered, they need to give the self invoice. So this point don't forget. Okay, even though government department or even though they are registered, but they are registered only as a TDS deductor. So which means every TDS deductor will have two types of registrations. Yes, TDS and TCS deductors will have two types of registration. One as a normal registration, another one will be as a TDS or TCS deductor registration. So who is a TCS deductor? E-commerce operator. So means e-commerce operators will have two registration. One normal GSTIN. So they will file GSTR1, GSTR3B, etc. Another will be TCS registration, wherein they will be filing only GSTR8. Same is the case for TDS deductor. They will have one normal registration for payment of regular liability. For example, you take Indian Railways. Indian Railways will have one normal registration for payment of their regular liability, plus one TDS deductor registration also only for the purpose of deducting TDS and filing GSTR7. Is that clear? So therefore, if they have only one registration as TDS deductor, normal registration is not there, they should be treated as unregistered person only. Got it? Now sir, when can we take ITZ in case of services under RCM? when can we take ITC? Keep that in mind. So these are all connecting provisions. When they can take ITC in case of service under RCM. In case of service under RCM, they can avail ITC whenever the invoice is raised by recipient to supplier. Okay, when the ITC can be availed, this was a May 25 point itself. This was a May 25 amendment itself, when the recipient can avail ITC in case of RCM. Whenever self invoice is given, whenever the recipient issues the invoice to the supplier, say there is a self invoice case, when the ITC can be availed. So there is a supplier who is unregistered, and there is a recipient who is registered. There is a supplier who is unregistered, recipient who is registered, and the supply is made. Supply is made on, say, 5th of July 2024, supply of services on 5/7/2024, which is taxable under RCM. Are you understanding this? Now in this case, who should be giving invoice to whom? Recipient should give invoice to the supplier. What is the time limit by which recipient should give invoice to the supplier? 30 days, correct? Self invoice to be given here, What is the time limit within which the self invoice to be given? 30 days. The self invoice to be given, say self invoice is issued on somewhere like 3rd August 2024. Self invoice is on 3rd August 2024. Within 30 days only they have given. Now for which month the recipient can avail ITC? The recipient has to avail ITC. Which month recipient can avail ITC? So recipient, because whatever GST paid under RCM, we can avail ITC. Recipient can avail ITC. In which month? July 2024 or August 2024 or August 2024. Whenever the invoice is issued by recipient to supplier, then only they can take ITC. Recipient can avail ITC for August 2024. For August 2024, they file 3B na. For August 2024, they file 3B. So in that 3B, they will be able to take ITC. When they will file 3B for August 2024? 20th of September. By 20th of September, they will be filing 3B. In that, they will be able to take ITC, but not for July month. Sir, this was the amendment for May exam itself. Okay. And so what we usually do is that whenever the payment is made under RCM, in that month only we used to take the ITC. Whenever recipient is making payment to supplier, that is whenever recipient is paying tax, in that month itself they used to take the ITC. But now they are telling that based on the invoice they can take ITC. So recipient can avail ITC for August 2024. Clear? Now here, and what is the usual time limit for availment of ITC? This is the minimum time limit pa. This is the minimum time limit. I am talking about the maximum time limit by which they can take ITC. What is the maximum time limit? Maximum time limit, we need to check the regular provisions of section 16 subsection 4. What is section 16 subsection 4 says? 30th November of succeeding financial year. For self invoice given in August 2024. August 2024 means it is which financial year? So it is financial year 2024-25. Financial year 2024-25. So 30th November of 2025, or B, date of filing annual return. Whichever is earlier will be taken as the maximum time limit by which this ITC can be availed. Minimum time limit August month whenever they are filing the 3B pa. But suppose if they miss, what is the maximum time limit? Based on invoice only you check. What is the invoice? 3/8/2024 na. So therefore 30th November of 2025 or date of filing and return, whichever is earlier should be taken. This is the time limit for ITC. Now covering all these things, that is covering the self invoice point, covering the RCM point, covering the time of supply point, we have one very good comprehensive question that we are going to discuss now. Okay, so see this question. XYZ Private Limited, a registered company under GST whose aggregate turnover during the previous year exceeds threshold limit, procures legal consultancy services from Mr. Santanam, an advocate who is not registered under GST. So first this paragraph you see, XYZ Private Limited, a registered company under GST, okay, whose aggregate turnover during the previous year exceeds threshold limit, procures legal consulting services from Mr. Santanam, an advocate services to a business entity whose turnover during the previous year exceed threshold limit, is taxable, and it will come under RCM, correct? This is a service covered under RCM section 9 subsection 3, read with notification 13 of 2017. Advocate service, arbitrator service to business entities covered under RCM, don't forget this, okay? The legal consultancy services are provided on June 15, 2023, and Mr. Santanam charges a fee of rupees 1 lakh, which is paid by XYZ Private Limited on June 16. So what is the date on which supply is made? The date on which supply is made is June 15, is the date on which supply is made by advocate, and when the payment has been made, the payment has been made by Santanam, by XYZ Limited to Santanam in June 16, 2023. Payment is made the next day. However, the self-invoice needs to be given in this case. Why self-invoice? Supplier is unregistered, the recipient is registered, and the recipient has to give the self-invoice to the supplier, correct? What is the time limit within which the self-invoice to be given? Within 30 days from the date of receipt of goods or services. What is the date of receipt of goods or services? June 15, 2023. From there 30 days you take, that is July 15, 2023 is the time limit by which the self-invoice needs to be given, correct? Now, however, the company accountant issues the invoice for legal consultancy services only on August 20, 2024 and pays the applicable GST in GSTR 3B of August 2024 filed on September 18. So what they are doing here? What accountant is doing? Bloody idiot accountant. So accountant is giving invoice on August 20, 2024. When it should be given? 1 month, 30 days, that is July 15, 2023 it should be given, means next year he is giving invoice leisurely, okay, and pays the applicable GST accordingly, and pays the applicable GST in 3B of August 2024 filed on September 18, 2024 and wanted to avail ITC in August 2024. Answer the following questions. First question. Who is liable to pay GST in this case? Already we know, as per section 9 subsection 3, the liability to pay GST is on the recipient, that is XYZ Private Limited. So therefore they need to pay GST in this case. That is the answer for the first part. 9.3, read with notification 13, 2017, advocate services, liability to pay GST is on XYZ Private Limited. Then second, what is the due date of invoice? And who is required to issue invoice? Who is required to issue invoice? As the supplier is unregistered, the recipient is registered. As per section 31(3)(f), the recipient has to give self-invoice to the supplier. What is the due date of invoice? Within 30 days from the date of receipt of goods or services, that is June 15, 2023 plus 30 days. June 15, 2023 plus 30 days, that is 15 July 2023. Next, number 3. Third question. What is the time of supply of service and due date of payment of GST, assuming the due date of 3B is 20th of next month? So time of supply we need to take as the date on which payment is made to supplier. What is the date on which payment is made to supplier? June 16. Or the date on which invoice is issued to supplier. Now only we discussed what is the time of supply in case of self-invoice. The date of payment to supplier or the date of invoice by recipient, whichever is earlier. What is the date of payment to supplier? June 16. What is the date of invoice to supplier? August 20. Whichever is earlier, definitely June 16, 2023 is only earlier. So see the time of supply. Date of payment to supplier or date of invoice to supplier, 16th June or 20th August, whichever is earlier, that is 16th June. If time of supply is 16th June, Then what is the due date of payment of GST? So usually they are telling that GSTR 3B, assuming that GSTR 3B due date is 20th of next month. So therefore 20th of July will be taken as the due date. 20th of July will be taken as the due date. Understood up to this? Time of supply provision. First we saw who is liable to pay GST and who is required to give invoice and what is the time limit for issuing invoice. Then we saw time of supply provision update. This is the latest amendment. Next, when they can avail ITC. By when they can avail ITC? Whenever they gave invoice. When they gave invoice, August 2024 means for August 2024 they can avail ITC. See the next question. By when XYZ Private Limited can avail ITC and whether they can avail ITC in June 2023. So August 2024 only they can take ITC. What is the maximum time limit? August 2024 is the date on which they gave invoice. Which financial year? 24-25 financial year. For 24-25 financial year, what is the time limit? The time limit will be 24-25 financial year. The time limit will be 30th November of succeeding financial year, that is 2025. 24-25 next financial year, PAR 2025. So 30th November 2025 or date of filing and return, whichever is earlier. So see here, time limit for availment of ITC under 16.4, 30th November of next financial year or date of filing and return, whichever is earlier. Even though services are received in June, ITC cannot be availed in June as the invoice is issued in August. So therefore ITC can be availed in August 2024 or later months, but before this time limit for availment of ITC. Minimum time limit, maximum time limit. Minimum time limit is as and when they gave invoice. Minimum time limit is as and when they gave self invoice. Maximum time limit will be the regular time limit, that is 30th November of succeeding financial year or date of filing and return, whichever is earlier that. Next, another part, last part of the question. Is there any interest payable in the present case? Is there any interest payable in the present case? What is your answer? Whether any interest is payable in the present case? First, as per time of supply, what is the due date? Sir, as per time of supply, the due date will be 20th July 2023. As per time of supply, the due date is 20th July 2023. They should have paid GST. Now, when they are actually paying GST, they gave invoice in August and pays the applicable GST in GSTR 3B of August filed on September 18. Means when are they paying? September 18, 2024 they are paying. What is the due date? 20th July 2023. When are they making the payment? Actual payment of tax. Due date of payment of tax, actual date of payment of tax. Due date of payment of tax is 20th July 2023. What is the actual date of payment of tax? September 18, 2024. So, interest will be calculated from 20th July 2023 till 18 September 2024 number of days. So, July 2023 to July 2024, 366 days. 366 days. Okay. So, then because 2023, 2024, 366 days. 366 days. Thereafter, in July, 11 days. 20th July 2023 to 20th July 2024 will be 366 days because leap year will come. Okay. And thereafter, in July it will be 11 days. 20th up to 20th you consider it. So 11 days. So 366 plus July 11 days. Then August 31 days. September will be 18 days. Okay. So therefore 366 plus 11 plus 31 plus 18, that will be 426 days. 426 days. For 426 days, we need to compute the interest on what? On the value GST. What is the GST? 1 lakh is the fee. So 1 lakh into 18% into 18%. 1 lakh into 18% is tax. On that 18% is the rate of interest into 426 by 366. 3,771 rupees. As invoice is issued by recipient beyond due date, even penalty can also be levied in this case. Okay. So that's the answer for this. Penalty can also be levied on account of delay in issuance of invoice. So that is with respect to this, and in RTP they gave one question related to it. Mr. Mutswamy, an electronics dealer registered in Bengaluru, Karnataka, hired Messrs. Parivahan Logistics, an unregistered GTA, to deliver his goods at the place of business of customer in Jaipur, Rajasthan. Messrs. Parivahan Logistics charged 60,000 for the transportation of goods, which was paid by Mutswamy on 4th January through account pay check. The delivery was also made on the same day. Messrs. Parivahan Logistics did not raise the tax invoice for these services since it was unregistered. In the present case, you are required to determine person liable to issue tax invoice as GTA service is covered under RCM and the supplier is unregistered. So, recipient is required to give invoice to the supplier. Okay. So, person required to give invoice is recipient Mutswamy is required to give invoice. And next question, what is the time limit for issuance of invoice? So, first one, who is liable to give invoice? Second one, what is the time limit? 30 days from the date of receipt of goods or services. So, what is the date of receipt of goods or services? So, the transaction, the delivery was made on the same day, that is 4th January. 4th January 30 days means it will be 3rd February. So, 3rd February will be taken as the time limit for issuance of invoice. Then next one, what is the time of supply for transaction providing service by GTA? Assuming that the tax invoice is issued on the last day on which it should have been issued, means the tax invoice is issued on February 3rd. What will be taken as the time of supply? The date on which payment is made to supplier. What is the date on which payment is made to supplier? 4th January, or we have the regular date of invoice, the date on which they are giving the invoice, that is 3rd February, whichever is earlier. So, date of payment 4th January, the date of issuance of invoice by recipient 3rd February. So, the time of supply will be 4th January. Got it? So, like this, they can ask a question. This is easy. Actually, it is easy. RTP question is easy. I made more complicated. I have given even interest provision also related to it. So, this part about vouchers already we completed, and in place of supply, value of supply, we don't have any amendments. Now, we are proceeding to the amendment in input tax credit. There is only one amendment in input tax credit. So, what is it about? Let me give you the background. Generally, there are some conditions for availment of ITC as per section 16. Total 8 conditions we have. Only a registered person can avail ITC. The invoice supply should be used or intended to be used in the course or furtherance of business. And the person availing ITC should be in possession of tax paid document, that is, recipient should be in possession of tax paid document. Recipient should have actually received the goods or services, and the recipient should file the return in GSTR 3B to avail the ITC. Then 3 conditions in the hands of supplier. Supplier should report the details in GSTR 1, number 2, and thereafter whatever details that is reported by supplier in GSTR 1 should not be restricted in GSTR 2B of the recipient, and thereafter supplier should have paid the tax to government subject to section 41, means now he don't have to pay, he should have made the payment by 30th September of the succeeding financial year. That's what section 41 says. These are the conditions. In this context, we learned one deemed delivery concept. What is that? When the goods are delivered to some other person on the instructions of the registered person, the day on which the third person has received the goods, it is deemed that the registered person has received the goods and the registered person can take ITC. For example, I am the supplier, you are my registered person, you are the recipient. Basically, I need to deliver the goods to you, but what happened? You asked me to deliver the goods to a third person. Now, I delivered the goods to a third person, but I raised invoice to you, bill to, ship to, transaction, correct? Now, the date on which the shipping address has received the goods, it is deemed that you have received the goods or services. This is normal, correct? So, which means you can take ITC even though you have not actually received the goods or services. The day on which I have provided the goods or services to a third person on your behalf, it is deemed that you have received the goods or service, you can take ITC. Now, in this context, they have given one clarification. Carefully listen. I am a manufacturer and I will be selling goods on X works contract. What is X works contract means? X works contract means at my factory gate, X factory, at my factory gate, I will hand over the goods to you. That is called as X factory price or X works contract, wherein at my factory gate, I will deliver the goods to you. Now, you need to take care of transportation. So, you are sending your transporter to my location and I deliver the goods to that particular transporter in my location, my factory gate. This was happened on 28th July. 28th July, carefully listen. On 28th July, I handed over the goods to the transporter, to your transporter. My job is done. The contract got completed. You received it on 3rd August in your place. Now, what will be taken as the date of receipt of goods? Is it 28th July or 3rd August? If it is 28th July, for July month itself, you can take ITC. If it is 3rd August, you will be able to take ITC for August month. You will not be able to take ITC for July month. You will be able to take ITC for August month. What should be taken as date of receipt of goods? For which they gave 1 point. That is, as and when I handed over, supplier handed over the goods to the transporter, deemed delivery gets attracted. As and when I handed over the goods to the transporter, it is deemed that you have received the goods or services. Consequently, you can take ITC. The deemed delivery concept is applicable. So say this. In X works contract, the supplier, for example, OEM, original equipment manufacturer in the automobile sector, car manufacturer you take, completes delivery at their own factory gate and the property in goods transfers to the buyer, that is dealer at that point. Transport and insurance may be arranged on behalf of the dealer and any loss is claimable by the dealer, that is buyer. As per explanation to section 16(2)(b), goods are deemed to be received when handed over to the transporter on behalf of the buyer, even if physically received at a later date. Okay. So, in our example, July 28th, handed over to transporter, but the goods are actually received on August 3rd. Therefore, the dealer can avail ITC on the date on which goods are billed and handed over to the transporter at OEM's factory gate. At my factory gate itself, as and when the goods are handed over, it is deemed that you have received the goods. Okay. If the goods are, so therefore you can take ITC for which month in our example? July month or August month? July month. You can take ITC, not in August month. If the goods diverted for non-business use or goods are lost, stolen, destroyed, written off or given away as gifts or free samples. So, if the goods are diverted for non-business use, diverted for non-business use means what? So, say from July 27th to August 3rd, you have received it for personal consumption. Even though you can take ITC for July, but you received it for personal consumption, means you should not take. So, reverse the ITC. Or during the transit, if the goods are lost, stolen, destroyed or written off, or you have given it as free samples, all these are blocked credits now, you cannot take ITC. So, ITC not available and already you availed ITC. So, what you need to do? You need to reverse, and the ITC already availed needs to be reversed. Got it? And this is not only applicable to automobile sector, even though we are discussing it in the context of automobile sector, but this is not only applicable for automobile, for all goods this will be applicable. Applies not only to automobiles but to all goods on X works contract where ownership transfers at supplier's location. Okay, look into this question related to this. Speed Auto Private Limited, a registered automobile dealer in Chennai, entered into a X works contract with Messrs Alpha Motors Limited, an original equipment manufacturer located in Pune. So, where is the supplier? Alpha Motors, Pune. Speed Auto Private Limited is recipient in Chennai. X works contract. As per the terms of the contract, the ownership of the goods passed to Speedo Auto at the factory gate of Alpha Motors once the car were handed over to the transporter. Messrs XYZ Logistics arranged by Alpha Motors on behalf of Speed Auto. The details of the transaction are as follows. So, transportation anyone can arrange. Transportation can be arranged by recipient or transportation can be arranged by supplier. But X works contract, the contract gets completed at the factory gate of the supplier. The invoice was issued by Alpha Motors on 20th April. Invoice date is 20th April for 10 cars, each priced at 10 lakh plus GST 28%. Goods were handed over to the transporter at the factory gate on 22nd April. So, 22nd April will be taken as the date of receipt of goods. Goods reached Speed Auto's premises in Chennai on 20th April, but 22nd April itself will be treated as the date on which goods are received. Out of 10 cars, 6 cars were sold to customers during May, 2 cars were used by company directors for personal use, 1 car was gifted to a business partner, 1 car was damaged in transit and written off in the books of accounts. Assume that Speed Auto files GSTR 3B within the prescribed time limit. Based on the above facts, answer the following. What is the date of deemed receipt of goods for the purpose of availing ITC? It is 22nd April. Because of this clarification, the date on which goods are handed over to the transporter is deemed that Alpha Motors has received. Okay, Alpha Motors, that is recipient is Speed Auto Private Limited, has received the goods. So therefore they can take ITC. So 22nd April will be taken as the date of receipt of goods. Compute the eligible amount of ITC that can claim in the month of April. In the month of April, what happened? Total 10 cars. 10 cars into 10 lakhs into 28%, total 28 lakhs. But the problem is 6 cars sold to customers means they can take ITC, whereas 2 cars used by directors for personal use not allowed because non-business purpose. 1 car gifted to business partner, blocked. Gifts are free samples. Written off due to damage, blocked credit. So which means literally only 16,80,000 can be taken as credit. And next, that is for the month of April. Would your answer change if the contract had been free on road basis instead of X works? If it is on free on road basis, the supplier is responsible for delivering the goods to the recipient premises, therefore the ownership and delivery would be deemed to take place and the date of receipt will be 28th April, that is the date on which they can take ITC. However, the amount of ITC eligible will remain unchanged assuming no disqualification arise later. So, eligible ITC same, but the date on which they are eligible to take ITC will be 28th April. It's a coincidence here that both dates are in the same month, but it may be falling in the another month also. Okay. Next, question number 2, it's an RTP question. Muscat Motors Private Limited, hereinafter referred to as MMPL, a dealer of motor vehicles registered in Udaipur, Rajasthan, has given a X-Works contract to Ganesh Traders registered in Ahmedabad, Gujarat for manufacturing 10 units of pickup vans. Messrs. Ganesh Traders manufactured the vans and handed them over to the transporter on behalf of MMPL on 29th April and delivery on its part is complete at its factory gate in Ahmedabad. Further, it raised the invoice for all 10 pickup vans on the same day, that is 29th April. MMPL has recorded the invoice in its book on the same day. Price of the vans was 10 lakh each excluding GST 28%. However, the vans were physically received by MMPL at its showroom in Udaipur, Rajasthan on 2nd May. They received it on 2nd May and the payment was also made on the same day. After the payment, 2 vans got damaged completely in a fire in the showroom in the first week of May and therefore they were written off in the books in the month of receipt by MMPL. Discuss the availability of ITC on pickup vans to MMPL with reference to the provisions under GST law. In which month MMPL is eligible to avail ITC on the purchase of the vans and how much ITC is available in respect of the vans? First, as per the deemed delivery concept, the date on which the vans are handed over to the transporter, that is 29th April, will be deemed to be the date of receipt of goods, so they can avail ITC for April month itself. So 16(2)(b) you need to write. Further, it is X-Works contract, so therefore they can take ITC. When they can take ITC? In the April month itself. So initially on 29th April, ITC can be availed. How much ITC can be availed? 10 vans into 10 lakhs into 28%, that is 28 lakhs. Subsequently, the vans were received in the May month and 2 vans were destroyed. So therefore, in the May month, they need to reverse the ITC. So ITC in respect of such vans which was already availed has to be reversed while filing the return of the next month, that is May, since ITC on the goods which were destroyed is not available. So what are the 2 vans cost? 10 lakhs into 2 into 28%, 5.6 lakhs needs to be reversed in May month. April month they can take ITC of 28 lakhs and in May month they need to reverse 5.6 lakhs. Okay. So this is a very good question of RTP. There is a chance that this can be asked in exam. So now, when it comes to composition scheme, we don't have any amendments. Then we are moving on to tax invoice, debit notes and credit notes. So in this, there is one point which says that we need to give invoice, and whenever we are issuing invoice, we need to mention the recipient details in invoice. Which means if it is B2B, no doubt we will mention the recipient details. But B2C, whether we need to mention the recipient details or not. So I'll tell you what is the provision. whether recipient details to be mentioned in invoice. B2B always recipient details needs to be mentioned in invoice, but if it is B2C, and if the value of supply exceeds 50,000, no doubt we need to enter. But if it is up to 50,000, we don't have to enter. However, in some cases, irrespective of the value, see, B2B always we need to enter, but B2C, irrespective of the value, we need to enter recipient details in invoice. Before amendment, they were supply of services through e-commerce operator, OIDR services and online money gaming. In respect of following case of supplies to unregistered, B2C, the suppliers are mandatorily required to record the name of the state of recipient on the tax invoice irrespective of the value of supply of such services. But now they have made an amendment that not only services through e-commerce operator, all online services are digital services. It may be OIDR service or not a OIDR service, all online services, they are telling that it will be definitely required to enter the recipient details. All online services, OIDR services and online money gaming. Previously services through e-commerce operator only they brought in. OIDR, online money gaming, now also same. Extra is supply of any such online or digital services. Any online or digital services. For example, this OTT, online classes, everything is anyhow OIDR. But even though it is not OIDR services, any online service provided over online consulting, or like this payment transactions, etc. Everything, online contracts will be signed over online. There will be an entity which will send the contract form and you need to sign and give. So all these may not be OIDR service, but even then for all online service also we need to enter the recipient details. In respect of following case of supplies to unregistered recipients, the suppliers are mandatorily required to record the name of state of recipient on the tax invoice irrespective of the value of supply of such services. And what should be taken as a place of supply? Location of recipient. In these cases, anyhow, general provisions only will be applicable. So, location of recipient to be taken, and declare the place of supply of the said service as the location of recipient based on the name of state of the recipient in their outward supplies in form GSTR 1. Then, that is the simple amendment. So, look into this question. Digital One Private Limited, a registered person based in Karnataka, is engaged in providing a range of online or digital services to customers across India. During the month of December 2024, it makes the following supplies to unregistered recipients. Type of service, OTT subscription, streaming service. Mode of supply, supply directly via company website. And recipient location Maharashtra, invoice value 1200, not registered. B2C, definitely we need to enter. And even next one also not registered. All these 4 transactions B2C, correct? All these 4 transactions B2C. OTT, definitely it's a OIDR. E-newspaper subscription, language translation, online quiz game credit, all these will come under the list of online services, OIDR services or online money gaming. So, in this case we need to give, it is anyhow registered recipient means we need to give invoice, but these 4 cases also we need to enter. So, say this, all these cases. In the present case, from serial number 1 to 4, state of recipient must be mentioned on the invoice and recipient location must be declared as the place of supply. Also in GSTR 1 or 1A, it will be reported as B2C transaction state-wise. Whenever B2C interstate means, why interstate? Where is the supplier located? Karnataka, and recipient location is in Maharashtra, Gujarat, Tamil Nadu, Kerala, means it is interstate transactions. In case of interstate transactions in B2C, GSTR 1 should be reported state-wise consolidation. Okay. So, that is this, it's a simple question. Then, this time limit already we discussed, time limit for self-invoice, 30 days from the date of receipt of goods or services. That's the time limit for self-invoice in case supplier is unregistered and the supply is covered under RCM. Related to that, one question is there. Harsha Textiles Private Limited, a registered company in Tamil Nadu, is engaged in manufacture of garments. The company procured the following supplies in November 2024. Legal consultancy service from Advocate V. Kumar, unregistered supplier, value 50,000, date is 3rd November 2024. So services, advocate services to recipient, definitely it is RCM, and self invoice will be applicable. It is RCM and the supplier is unregistered, so self invoice will be applicable. What is the time limit? 3rd November means we need to take 30 days from 3rd November. So it will be 3rd December 2024. That is the answer for the first part. Second part, service of GTA, consignment note issued, supplier is registered. Even though it is covered under RCM, because default GTA service is covered under RCM, but as supplier is registered, there is no self invoice that is required, not applicable. Supplier only will issue invoice. Raw cotton purchased from farmer. Yes, raw cotton is in the list of notified goods on which GST is payable. This is covered under RCM, list of notified goods under RCM. So it will be RCM, and as supplier is unregistered, it will be covered under RCM. So whether self invoice is applicable? Yes, self invoice is applicable. So raw cotton by agriculturist to registered person is notified under 9(3). So it will be covered under RCM. Self invoice to be given within 30 days. That is 7th November 2024. So plus 30 days, 7th December 2024. Manpower supply service, but this list of goods under RCM is not there for inter, but at final level it is there. Manpower supply service received from SAM Workforce Private Limited. Manpower supply service, supplier should be other than body corporate, then only it will be RCM, but supplier is body corporate, so it will be FCM only. So self invoice will not be applicable in this case, and supplier only should give the invoice, but supplier is unregistered, so there is no GST. As there is no GST, no invoice. Purchase of steel shelves from a local unregistered trader for office infrastructure, we don't have anything related to this notified for RCM, even though supplier is unregistered, but we don't have it in RCM, it will be FCM only, and as supplier is unregistered, there is no GST in this case. Sponsorship service availed from Chennai Sports Club, a registered entity. Supplier is sponsorship service, supplier should be other than body corporate, yes. Recipient is body corporate or firm, so it will come under RCM, but self invoice not applicable because supplier is registered. So supplier only will give, self invoice is not applicable. So like this, a question can be created for the purpose of self invoice and connecting with RCM. And registration, TDS, TCS, GST, payment process, we don't have any amendments. Then in returns, there is one point, TDS return. So GSTR 7 is the TDS return which will be filed by the TDS deductor. Previously, if there were no TDS deducted, return was not required to be filed, but now they have mandated that whether you have TDS deducted or not deducted, you need to file nil return. Every registered person required to deduct tax at source under section 51 shall electronically furnish a return for every calendar month of the deduction made during a month in such form and manner and within such time as may be prescribed, provided that the said registered person shall furnish a return for every calendar month whether or not any deductions have been made. Even if they don't have any TDS deduction, if they are a TDS deductor, nil return at least they need to file. Suppose if they have not filed nil return, will there be any late fee? That late fee is waived off now. Waiver of late fee for delay in filing nil return, provided further that the total amount of late fee payable under section 47 who fails to furnish nil return, stands waived. Right now they have waived, but whenever they wanted to bring, they can bring it into this. Simple part, TDS deductor needs to file nil return. They have to file, simple. If they have not filed, will there be late fee? Right now late fee is waived, but in future it may come. So then accounts and records e-way. In this accounts and records e-way, one simple amendment is there. Unregistered person, whenever the unregistered supplier is supplying the taxable goods. See, the moment goods are taxable, definitely e-way is applicable. What if the unregistered person wanted to generate e-way? They need to get a unique enrollment number. Unregistered person opting for generating e-way, yes, transporter can generate or recipient can generate. If the supplier wanted to generate, opting for generating e-way or unregistered interstate supplier of handicrafts, always e-way needs to be generated. So these two people, unregistered supplier who is opting for generation of e-way or unregistered interstate supplier of handicrafts or even unregistered recipient who wanted to generate e-way bill. Now, if you want to generate e-way bill, previously just permanent account number can be used for generation, but now what they are telling is that get a unique enrollment number and then only generate the e-way bill. From where you need to get unique enrollment number? From the GST portal, get a unique enrollment number and then generate e-way bill. Who are required to generate unique enrollment number? UEN number 1. Every transporter and warehouse keeper is required to generate unique enrollment number. So, UEN is mandatory in the following cases. What are the cases where UEN is applicable under GST? UEN is applicable, unique enrollment number per UN means, is applicable in the following cases. Is applicable in the following cases. This can be asked as a short note question also. This can be asked as a short note question also when UEN is applicable. Number 1, every unregistered transporter, or warehouse keeper. Every unregistered transporter or warehouse keeper. Number 2, unregistered supplier making intrastate supply of goods through e-commerce operator. So, if they are making only intrastate supply, generally a person who is making supply of goods through e-commerce operator is compulsorily required to get registered. But if there is an unregistered supplier who is making intrastate supplies through e-commerce operator, making intrastate supplies through e-commerce operator, is also compulsorily getting UEN, not registration. UEN does not mean registration, just the enrollment number. Now, number 3, unregistered person opting to generate e-way bill. Then unregistered supplier of handicraft goods, interstate. Unregistered person making interstate supply, that's what is given now, interstate supply of handicrafts, making interstate supply of handicrafts. So, these are the 4 people, handicrafts, these are the 4 people who are required to generate or who are required to obtain unique enrollment number from the portal, and just because they got unique enrollment number, don't call them as unregistered person. They are registered only. Don't call them as unregistered. They are treated as unregistered. My bad. They are treated as unregistered. Don't call them as registered. Even though they are getting unique enrollment number, don't call them as registered. They are treated as unregistered persons. Okay. So, that is about this. Yes friends, with this we completed all the amendments which are applicable for September 25 exam from May 25 exam for GST CA Intermediate. And these amendments anyhow I am going to incorporate in my new exam oriented batch, which is going to commence from August 6th to August 9th. August 6th to August 9th, 9 AM to 6 PM live in our YouTube channel. If you wish to attend, if you are from Chennai or any part of Chennai or Tamil Nadu, if you wish to attend face-to-face classes, you can definitely attend. So, that will be in Mylapore Fine Arts Club in Chennai, and the description to this video you can find the Google form related to this, as to you can fill in the details, you can register and you can attend, and you can directly also come, not a problem, but register so that it will be easy for us to do the communication, etc. and all. Online you don't have to do registration, just you can subscribe to our YouTube channel so that as and when we post it, immediately you will get the notification and you can start watching it. Thank you all, and a humble request to everyone. So please subscribe to our channel and make our channel grow so that all other students also will get benefited. As and when you subscribe to our channel, your friends will also be able to get the notifications, etc. and all in their news feed whenever you subscribe to our channel. Please keep supporting us, and thank you all always for the sake of the students. All the best for your exam, prepare well, and we will meet with the exam oriented batch. Thank you. Save the date, August 6th to August 9th. Thank you.